2023 that was signed by the immediate past administration. So it is imperative that every company pays their tax to the government. And when it comes to company, the tax authority that has jurisdiction to collect tax for companies is the FIRS, Federal Inland Revenue Service. If you are paying tax as an individual, say payee, if you have a personal business, or you are into you are self-employed, or you're under any employment, you are expected. That is governed under Personal Income Tax Act 2011 as amended. And you're expected to file your tax returns to the states where you are resident. We call them, depending on the states, some states are called, State Board for Internal Revenue, SBIR. Some are called State Internal Revenue Service. For example, the one in Lagos is LRS, Lagos Internal Revenue Service. So if you're an individual, you earn a profit, all income from all sources, you're expected to remit your tax to the, if you stay in Lagos, for example, you're expected to remit your tax to the LRS. So why is accounting for small business important? Because I know that is what we have before us today, small business. So before we even go ahead before diving into the theme, I would like to define what accounting means. Let's pick the concept one after the other. What is accounting? What is small business? And maybe I just need to give an overview of what will be discussed generally in this class. So we want to bring you to get yourself accustomed to what it takes to prepare, to keep proper books of accounts, and also prepare financial statement as it relates to your business, because it's important. And I'm aware that a lot of us are entrepreneurs, right? Yes. We are even interested in getting grants from either international grants or local grants. Of course, in this presentation as well, I'll also dive into some of the grants you might be on the lookout for as a small business that can help you. But one of the requirements is that you must have you must be able to keep track of your of either your revenue, your expenses, and everything is shown in how you can account for your for your small business. So can we proceed now? So what is accounting? Can I have the next slide? Accounting. Or before then, let's take a brief statistics of why it is needed. Yes. Yes. So why is it needed? Because sometimes before we start discussing I'll let you know after the class. Yes. Thank you. So the first thing we need to do is to appreciate statistics. Because when you are talking about accounting for small business, personally, I'm someone who believes in numbers, business idea. I want to see you quoting statistics from reputable institutions. For example, according to a study by Reshman in 2022, he posited that the most obvious risk of not keeping proper books of account is that business concern will lose its most valuable assets. So we need to first understand why you need this session. If you fail to keep, this man is saying that from his research work, his assertion was that if a business fails to keep proper books of account, what happened? It risks control over his most valuable assets. What does that mean? Your most valuable assets can be your cash. It can be your intellectual property. We are now having research work in intellectual property. People are now trying to see that what really shows the value of a company is beyond what you have on the financial statements. Let me break it down. What shows how valuable Next Factory is, for example, is beyond, for me now as an accountant, for example, is beyond just showing me that, oh, this is our net profits for this period. We make a net profit of, say, maybe 10 million naira. I know personally from my background that it is beyond the amount a company disclosed as net profit. It's beyond that when it comes to knowing the value of the company, right? And that is why there have been research work, which I also did, recently, about but my sample was on the manufacturing firms, small scale business. I'm trying to look at what accounts for the disparity between the value of a company as contained on the Nigerian Exchange Limited, that's Nigerian Stock Exchange. You know, of course, the way we view companies is their value, right? If I go on the floor of the Nigerian Stock Exchange, it's open at the moment, for example. If I look at the market capitalization of the companies to say, oh, Nestle stock is trading at about 1,200 naira. It shows that this company, because there are various means of calculating company's value, of course, it could be market capitalization based on the value of the company. It could be Tobin Q, as the case may be. So if I use market capitalization method or technique, and I go there and I'm saying that, oh, this is the value of Nestle as quoted where on the stock exchange, and that is how the public will see it. But I might go to their financial statement and see that what I have disclosed in their financial reports does not tally with what is what on the as their market capitalization of value. So that was what I was trying to look into to see one of the causes, and I realized that intellectual property is also a cost. And what do I mean by intellectual property? Those are resources that are inherent in people. That's why you see that organization will pay fortune to get the best hand to steer their affairs, right? So that study shows that intellectual property is very, very important when it comes to the financial performance of what small and medium scale enterprises, and also the value of those companies. What am I trying to say? What I'm trying to say is that the fact that the financial reports is saying that a company is doing well does not mean in actual sense they are what? They are doing well. So these are some of the things I want to bring on board in this class, so that at the end of the day, you will be in a position that you are well informed about what accounting is all about, but particularly as it relates to your business. So this man is saying that if you don't want to lose your most valuable asset, then you have to keep what? Proper books of account. And it's a recent study, 2022. So you have to keep proper books of account and make sure that your proper books of account, you also make disclosures of necessary information, right? For example, if you're applying for grants, which I will still get there are certain information that is required of you if you're applying for grants. So, and if you own a business where all these things are not your priority, at that particular time, it may have to involve you running around and all of that. So it's important to understand that keeping proper books of accounts is necessary for the survival of a business. Then there's also a study by Forbes, 2023, just this 2023, because I realized that business are now going online, right? Almost everybody here, if you own a small business, at least you have an IG page. Am I correct? Am I correct? You have an IG page. You have, what do you call it? Maybe Facebook, maybe, in fact, some of us are even on LinkedIn, for example, where you want to pitch whatever you do to your prospective, clients, as the case may be. So what this report by Forbes in 2023 is saying that 20.8% of retail businesses are expected to take place where? Online, retail purchases. So that also drives home the point that if you own a business here, another thing you may want to consider to grow your business is to see how you can also go online, because that appears to be where you can get your prospective client, right? I'm having a session here now. I'm sure there's people in other places listening to what I'm saying. So therefore, that drives home that point. So if 20.8% retail purchases are expected to take place online, then what happens? It means that e-commerce sale will increase to what? 10.4% in 2023. That is a projection. So it means that as a business, you must begin to see how you can also go online. Next slide, please. So we now ask ourselves, what is accounting before even business accounting? What is accounting? What is accounting? So let me ask. I'm asking now, what is accounting? Because I'm going to make sure this session is interactive. Whether you have an accounting background or you don't have an accounting background, whatever you say here is correct. And that's one thing about research. I hope you know, nobody is wrong. It depends on how you can drive home your points. In fact, I was having a conversation with someone I think last week, I was telling the person that even what we study in school today, they were proposition of certain scholars. Why are we studying in Nigeria? It's because it is what universally accepted. It has been tested. Why are we saying the definition of economics is given by a man called Leon C. Robbins, for example? And we are studying it today, even if he has died as far back as maybe the 17th century. It's because he did a research work, and that was his assertion that, okay, I believe this is what the study of economics is all about. And we all agreed. And because we all agreed, what happened? We now have them as a course in our university, and we are studying them. So what I'm trying to say is that whether you are from an accounting background or finance background or not, this class, you have to talk and you have to say something. And if you probably are not talking, I might be forced to just summon you to say something, right? So let's start from there. What is accounting? Yes, what is accounting? We must say something. What is accounting? At least you have heard about accounting before. Even when somebody give you money and they tell you, you have to account for that money, isn't it? Isn't it? So what is accounting?
Yes.
Let's start from there. What is accounting? Do you want to say
Hello,
something?
sir. Yeah.
What is accounting?
Hello, can you hear me, sir?
Okay, somebody is speaking. Okay, I can hear you. Please go ahead.
Yes, sir. To my own understanding, I believe accounting is the process of recording, classifying, and summarizing and interpreting the books of accounts. Like,
oh, thank you very much. The process. Okay, go ahead.
Yes, that's it.
All right. Thank you very much. The process of recording transactions. Thank you very much. Yes, may I know your name, please?
Bolaji
Obikoya. Thank you for that. Thank you very much. Yes. Any other person? Accounting. Yes. On-site participant. Accounting. Tell us your name and what you understand by accounting.
My name is Ronke Babatunde. So accounting is a record that shows how finances is being the spending and let me say spending, and how at the end of every month you have to show a balance. This is what coming and this is what goes out. So that's what I understand.
All right, thank you very much. So if I will help you summarize that, you're saying accounting keep tracks of your revenue or your income, as the case may be, and your expenditure over a period of time, right? Thank you very much. Yes, over to you. Everybody is talking. Accounting.
Accounting has to do with the collection of data, information, and then the evaluation of all of these things. Then evaluation of financial expenditures in a company so that you can track them and then keep record of all of it.
All right. Thank you very much. So basically, accounting is about keeping track of your expenses and revenue. Yes, let's have one more person.
Okay, so I think accounting has to do with first off tracking your sales, how income comes in, that's your revenue, as well as your expenditures. Accounting also involves having to understand what assets and liabilities you have as regards your businesses. And then you have to always provide a financial statement to help you know how viable your business is, if you have to close your business or probably make some changes, just to ensure that your business is profitable at all times.
All right. Thank you very much. Thank you very much. Yes, everything we had said, like I said earlier on, is correct. She's talking about the fact that accounting can help you make decisions. If I summarize that for you, to see whether you can close down your business or a section of your business. Because of course, as a business, you can have different sections. Let me, because I know of some small businesses that does that. They produce it, they know how to do it, and they also sell it. So you can now begin to look and say, okay, if I account for my business, do I need to still continue producing it? That's the production section. Or I should just contract the production section out, and maybe let me just retain the selling or the distribution aspect of the business. So that's a valid point as well. So accounting can help you make decisions, although that is a section in accounting, because accounting have different branches. You might be talking about the cost accounting or management accounting section. You might be talking about the financial accounting section, the taxation section, the auditing section, the forensic and investigative accounting section. So thank you very much for that. So all we have said is correct, both online participants and on-site. We are all right. So what I just want you to know is that when you talk about accounting, generally, you are talking about how you can, or before I even define that, we have bookkeeping, we have accounting. Yes, and it's important. I'm going to stress that because it's common among small businesses or entrepreneurs. They are keeping books. They will think they are what? They are doing accounting. It is two different things. Yes. You can go to, how many of you have gone to a grocery store before? You just go there and there is one girl at one side. Once you buy anything, you just go and write it somewhere. Sold 5 packets of sweets at so amount. And she writes that. That's everything she does every day. Have you been to that kind of grocery store before? What that lady is doing is just what? Bookkeeping. Someone will argue, we say, what if she's recording the sales? Of course, she can even tell me that at the end of the day, I made a sale worth 1.5 million naira. But the question is, she's still keeping books. Now, this is what I test, people with. I said, all accountants are bookkeepers, but not all bookkeepers are accountants. Discuss. All accountants are bookkeepers, but not what? All bookkeepers are accountants. Discuss. Right? You understand where I'm going? So when you talk about bookkeeping involves the collection, right? The summarizing, the classifying of an entity's economic events. Because sometimes if you don't want to say financial transaction, you can refer to it as what? Economic events. And entities what? Economic events. That's where it ends. But when you now go further, after you have collected, after you have classified, you now go ahead to analyze, present in the form of a financial statement or report to aid decision making. Then what you have done is you have done what? Accounting. That's why I said I love your definition, because any books you are keeping that is not sufficient to make a decision, then you are not accounting. You are probably just keeping books. If I go to that grocery store, I give us an example earlier on. I just go there. Oh, what's the information you have collected into what? Into a financial statement or
Hello, please, we couldn't hear the speaker anymore.
In the head, and the person was just going, he slept and he died. Even when somebody hits you with a car, I think they call it, I'm not a law person, but maybe a manslaughter or something. So they will still have a way. And if you check what they are doing, they are trying to look at the provision of the same law in Nigeria that can what? That can work in favor of that person. So when you say tax, minimizing your tax liability or tax avoidance, what you're trying to do is legitimate to see how you can use the provision of the law to your advantage. But when you say tax evasion, that is illegal and is a criminal offense. It means that you deliberately, is a criminal act not to pay tax. And if you are caught, of course, FRS have the list of penalties, including, what do you call it? Including the person being sentenced, imprisonment, thank you. So you have to pay a fine, including imprisonment as well. So that is why, as a small business, I know everybody, especially in Nigeria, we don't want to pay tax. I know, we don't want to pay tax. But the truth is that you need to. Although I'll still discuss with you, if we're talking about maybe before 2019, as a small business, if you were not paying tax, there might be issue. But guess what? There is a legislation currently in Nigeria that exempts small businesses from paying tax. We will get there. And that's the essence of this class, right? So now we are talking, right? So that is it. So in Nigeria, for example, a lot of people, let me use the word of the partner in PwC and West Africa Tax Leader, you know him, Taiwo Idele, is a well-known tax expert in Nigeria. Let me use his words. In one of his seminars, he was saying that in Nigeria, you can't have everybody in the tax net. Most of us, it's only our head that is in the tax net. The remaining body is outside. What is he trying to talk about? Everybody is trying to see how they can what? They can avoid tax. That's why you can have the head or the finger in the tax net. Why the remaining body is out? What he's saying is that when businesses disclose their profit upon which tax will be calculated, in most cases, they are profits that are not really a reflection of the profits of the company. Do you understand what I'm saying? So the question is, what are small businesses? According to Company and Allied Matters Act 2020. Company and Allied Matters Act 2020 is like a regulation that regulates the how do I put it now? That regulates the registration, not only registration, organization of companies and the winding up of companies, because that is the function of the CAC. CAC is Corporate Affairs Commission. When you own a small business, one of the things you are required to do is to register it with CAC. Yes. So what governs all those things you do is CAMA, Company and Allied Matters Act. We used to have, you know, from Company and Allied Matters Decree in 1990, the Company and Allied Matters Act during the civilian dispensation, until 2020, when certain important provisions were amended. And one of them is small companies. So the next thing we want to ask ourselves is, according to Company and Allied Matters Act, where you have to register your business, what do they understand by small business, or what is a small business? So let's explore together. So CAMA is saying that small businesses or a small company is a business, is a private business limited by shares. Private business limited by, I can see the way you're looking. It does not mean that all these provisions has to be present. Yes. It's a private company limited by shares, has no foreign shareholders, right? That means all the shareholders are of Nigerian native, right? No foreign shareholders. Then his director owed at least 51% of the shares. In accounting, for example, not even in accounting, according to this same CAMA, when any shareholder owed about, I think, 5% of the total share of a company, you call them a majority, they are part of the majority shareholders of that company. And that's why when you see if you are conversant with what is happening, this Otudeco issue and the other man about FBN shares. Have you heard about that? That's what is going on. Because the other man is buying, I think, 14% or so, which when you hold a significant percentage of when you hold a significant percentage of the shares of a company, it means that you are one of the majority shareholders and you can even elect the chairman of the board of directors that will drive the affairs of the company. And that's one of the reasons why we have this issue. But that is not the bone of contention of this class. What we are saying is that his director hold not less than what? 51% shares. And what does that mean? If the shareholders are not are Nigerians, are not foreign shareholders, that means, of course, the directors has to be what? Of Nigerian descent, right? Now, the next thing is none of his member is a government agency, or a nominee. Right? What that means, right, is that for a small company, one of the things you need to know is that none of his members is what? A government agency or a nominee. Then it has a turnover of not more than 120 million naira. That's where I'm going. That means that if your turnover, what is turnover? Your turnover is like your sales, your net sales. If your net sales is no more than 120 million naira, for the period under question, you are a small business. A lot of people may not know this. Once your turnover is not up to what? Your turnover means your sales, your net sales. In the period, say a year, under review, it's not up to 120 million naira. It means that you are what? You are a small business. And you're entitled to some tax exemptions. I know entrepreneurs will smile at this point because nobody wants to pay tax or wants to minimize their tax liability as much as possible, right? So once your turnover is not up to 120 million naira, you are what? You are a small company. And also, it has a net asset of no more than what? 60 million naira. You don't need to cram it, you know. The turnover is what? No more than 120 million naira. Be divided by 2. That's what? 60, Abi. So the net asset should not be more than what? 60 million. Once your net asset, we'll still get there what we mean by net asset. Once your net asset is not more than, once your net asset is not more than 60 million naira, you are also a small company. Right? So let's go. Next slide, please. Okay, question. Okay, quickly, before next slide. Quickly. Yes. From tags. So that, okay. This online from the other.
Okay, so my question is it possible for a company to continue to declare a turnover of less than 120 million so that they can still be classified as small business? So for example, you're a small business from 1 to 3 years, but 10 years after launching the business, you're still claiming small business because, as it were, you're declaring a net profit of less than 120 million. Yes.
All right, thank you very much. Well, you have a question too. Should I answer this first? Or is it related to what she just said? Okay. Well, I would say that for you to be declaring 120 million turnover, when in actual sense it's more than that, I would say that what you are doing is tantamount to tax evasion. Do you understand? Because by the time an investigation is launched and it is discovered that your turnover in actual sense is more than 120 million naira, right? And you are claiming that it's 120 million naira, it's going to be a serious issue for your business. Yes, it's going to be a serious issue for your business, right? So what I would advise in the ambit of the law is that once your turnover exceeds that, there's no problem. You can Do you even know that as a small business, the fact that you are exempted from company income tax does not mean you are not supposed to file tax returns? I'll still talk about it. Yes. The fact that you are exempted does not mean you should know what. In fact, there's a particular type of tax, withholding tax, for example, that you still have to file. At the end of the day, after you have filed it and you pay, the FIRS will now refund you. Yes. That's why sometimes as a business, if you are looking at going on a larger scale, even when you start as a small business, that's why one of the advice again we also give is that you can have a tax expert on your team as well that can guide you through. Because if I stand here to tell you that your turnover is 120 million naira and that you should keep saying it's 120 million naira when it's more than 120 million naira, and I'm teaching you to evade tax. Do you understand what I'm saying? It means that what? I'm teaching you to evade tax. So it's not advisable. So once your turnover is more than 120 million naira, you have to disclose it. Then I will also tell you the advantage. You see that the tax you even be paid. There's even a shocker. When I get to Finance Act 2019, this is the definition by CAMA 2020. Finance Act still has its own definition of a small company. So when I get there, I think you will get more clarity. Are we good? I hope that answers your question. Yes. Over to you.
My question is this. I have two questions. The first one, let's say as you're approaching a turnover of 120 million, and then due to maybe as a virtue of expansion, and then instead of, because you don't want to be paying the tax, and you decide to kind of split your company by creating another company with a different name. How is that? Is it lawful? Like, yes, entirely. No, I have another question. So the second question is this. Maybe as time goes on, there is inflation. I don't know if like now the price of fuel has gone up. This 120 million, does it still hold? It's not supposed to have increased.
Thank you very much.
So
let me start from your last question. I'll go back to the first one because I think that is very, very fresh. One thing about laws and regulation is that I understand what you are saying, that Nigerian inflation rates June, which has been about 6 years on the high, being 22.79% as of June 2023. Means, the amount for, what do you call it now? The threshold for your turnover and your net asset should have increased, right? But it's not so. When it comes to regulation, if there is no amendment to that law, by amendment, I mean, if nobody raises it in the National Assembly, it still remains. Do you understand what I'm saying? So it does not matter. Inflation is a macroeconomic concept, and it can only affect the likes of your value of money, the prices of goods and services, and all of that. And that's why you see now that the amount for transportation is now on the high. And even I was discussing with some guys yesterday, not even yesterday, this morning. One of my friends was telling me, as I'm going like this, I want to go and fight my employer. I know if you collect that money again because I cannot continue like this. He said, imagine, he works at, I think, Agege. He said, imagine from Yaba to Agege, it used to be, I think, 500 or 400. Imagine now, yesterday I was coming, they were saying 1,000. And no people are on the road. How much is my salary? He said, permit me to speak. He said, why aren't coming? Do you understand? So what we are saying is that when there are things like that, it's a macroeconomic concept. It's a variable. So of course, it's going to have a ripple effect on all businesses. How? Your cost of production will go up. Yes. Let me break it down in a way. I think I'm not here to teach economics, but maybe it's needed, right? So if, for example, you buy inputs to make your cosmetic, do you understand? So you get those inputs from whatever, By now, if before the amount you spend is say 1,000 naira, both transportation inclusive and all of that, by now how much you will be spending? Maybe 1,005 or even 2,000 naira. And by 2,000 naira, that's about 100% hike in your input already. And as a business, you would not want to run at a loss. So what will you do? You will want to shift that increase in price to your consumer in form of a higher price of goods and services. Do you understand? And that is where the effects will start coming. Do you understand? So it does not affect this only when there is a bill in the National Assembly to amend this, which I think will not be a subject at this time, when the government is even trying to see how they can, launch palliatives to see how this season can be managed, right? Do you understand what I'm saying? So it does not affect this, only when there is a bill to amend it. If not, it still remains till whenever. Then your first question, you have a business, right? And you now discover that this business is growing big, and the turnover will soon reach 120 million. As Lagos boy, sharp boy, let me split this business. Let me now go and register a new business, right? So that, of course, when you go and register a new business, the Corporate Affairs Commission that register businesses, if you meet the requirements, they will still see it as what? A new business on its own. That means the intention you're having is to run the other business as a new business on its own, right? Isn't it? If you are doing that, of course, you still be seeing, because at that point, there is a concept in accounting, which I'll still talk about, known as the legal entity. What do I call it? Legal entity means that a business is separate from its owners, right? And every business exists on its own. Do you understand what I'm saying? You might be the owner of Next Factory, the owner of Poise Nigeria, a training institute as well. The truth is, you are the owner of the two, but both of them are what? They are different entities. And as such, the law will treat them that way. Do you understand what I'm saying? Does that answer your question? All right. So, no, it's still 120 million. Only if tomorrow somebody in the National Assembly says, okay, I think this 120 million is no longer sustainable. Probably because Nigeria needs to expand its tax nets to see how much they can generate as much as possible. And that's what this administration is trying to achieve. If you follow the policies. That's why now there is what we call a motor vehicle levy. I think 1,000 naira or so that you need. So the government is trying to see, because over time we've realized that there has been, of course, budget deficit and all of that. I don't want to dive into that. That is, and how do I put it? That is a word on its own. And what we are here to talk about is accounting for small business. Maybe along the line, if you ask question in that line, of course, I will share my opinion and my thoughts on how that works. Is that fine? So let's continue. Next slide, please. Finance Act, the shocker. All right. So look at the screen, everybody. Now, classification of companies according to what? Finance Act. Kama 2020 tells us that once you have a turnover of 120 million naira, not greater than 120 million naira, and a net asset of not greater than 60 million naira, you are a small company, right? Finance Act came in 2019. And this Finance Act, although I'm putting 2019 here, but we've had amendments. We have Finance Act 2020, we have 2021, we have 2022. In fact, we have 2023. The last president signed it before handing over. And it was supposed to be operational immediately, but Tinubu, I think earlier this month, he signed an executive order to postpone the effective dates of Finance Act 2023 to 1st of September. Why? Because they want to see how they can minimize the current hardship that's coming with some of the policies the government is taking. So Finance Act 2023 will become what? Effective from what? 1st September 2023. Of course, all of them have their own provisions. I will try as much as possible to touch as much as I can. And the one I'll be touching will be as related to small business. So that at the end of the day, we don't end up talking about Finance Acts. So what is Finance Act saying concerning small companies? Can somebody see what is happening there? It says turnover of what? Greater than, less than or equals to, we're still debating 120 million. So Finance Act is saying once your turnover is less than or equals to what? 25 million, you are a small company. And there was this issue between, companies were now like, which one are we obeying? Is it Finance Act or CAMA? FIRS now came with a statement, a circular in 2022 to clarify that you are a small company when you follow this. Once your turnover is what? Less than or equals to what? 25 million. That means the 120 million does not hold any longer. That's what it means. Because FIRS has a jurisdiction since its establishment to ascertain, collect, and account for tax on behalf of the federal government. And company income tax, which your business will fall as it grows, is within the jurisdiction of FIRS. Do you understand what I'm saying? So if you're a small company, by Finance Act definition, you're a small company if your turnover is less than or equal to what? 25 million. Once it's more than 25 million, you have what? Transitioned. Say transitioned. Say transitioned. You have transitioned from a small company to a what? Medium company, comfortably. And if your turnover is now more than 100 million, what happens? You have transitioned to a what? Large company. And you are now expected to be paying all the tax due. Company income tax, capital gain tax, as the case may be, tertiary education tax, which I'm going to talk about here at this slide, because this is like a summary of what Finance Act is saying concerning small businesses or classification of businesses. So you now begin to ask yourself, so you're expected to begin to pay tax once your turnover is more than what? 25 million. If it's less than 25 million, your company income tax is what? Is nil. You're not paying anything. And your tertiary education tax, that is TET. What is tertiary education tax? Every company in Nigeria pays what we call tertiary education tax. Before, it used to be 2%. Finance Act, I think 2020 came, it became 2.5. No, Finance Act 2021, and it became operational in 2022 because it was signed 31st December 2021 by Buhari. It became 2.5%. Now, Finance Act 2022 came and moved it to 3%. Why? Citing the need that our tertiary education, in Nigeria, tertiary institutions in Nigeria are what? Underfunded. So every company pays this tertiary education tax and is calculated as a percentage of your accessible profits. Good. The government to do that, right? We have an enabling law that was even amended in 2011. That's Tertiary Education Tax Act. It established what we call TET fund. How many of you have been to universities before? No, I'm sorry. No, I didn't mean to say it that way. Yes, exactly. I didn't mean to say it that way. I want to say that how many of you have been to, you're in university and you see a building, they write TET Fund Intervention Fund 2013. Have you seen that before? This is all the money they get from here. That's where it goes. And you now know how it works is that once that money is accumulated by TET fund, is a fund set aside by the government. So every institution, it will not be given to institution based on their needs. And according to the last report I read, I think once you say maybe you need a lecture theater, what maybe 25 million. I think the only amount they will release from here is that I think they will fund maybe 80% or 85%. I'm not sure. Why the institution himself will fund maybe 15%. So all those money accumulated from this tertiary education is what is used in our schools. That's why you go to polytechnics, you will see it. Go to universities, you will see it. Now, one of the, just like the question you asked, that's one of the analysis of some tax experts to say that why are we increasing our tertiary education fund from 2% to 2.5 to 3%? Why is it so? And one of the arguments is that the government is saying we need more funds to fund our tertiary education. But one of the arguments of tax experts is that, see, the problem with Nigeria is not about increasing the rates. The question is, the money that have been generated in the last 10 years or 20 years, can we account for it? How has it been expended? Do you understand? So, like I said earlier on, that's another thing on its own. Let's come back to the class. But all these things are some of the things you need to know as an entrepreneur and as a prospective CEO, right? That you need to know as you go about all these things. Because, so coming back to the small companies, your company income tax is nil. Company income tax is calculated based on your chargeable or taxable profits, while tertiary education tax is calculated based on your what? Accessible profits. So if you're a small company, you are not paying anything, although you have to file returns. Return means that, oh, this is my turnover for the year. You file it to FRS. Oh, this is what I have received for the year. But at the end of the day, you know you are not what? You are not paying any tax because your company income tax is nil. Tertiary education tax is nil. Then for medium companies, once your turnover falls, yes. This one, I mean to say greater than 25 million, not just 25 million to 100 million, so that you don't get it mixed up. Once it's 25 million and 100 naira, I'd not say 100,000. Once 25 million and what? 100 naira is too much. And 1 naira, you are a medium company. That's what Finance Act is saying. And should I tell you the truth? Finance Act, the major reason behind Finance Act by the government then is to see how they can help SMEs thrive. Yes, if you read the content. As a matter of fact, do you even know that if you are a small company and you are involved in manufacturing, for example, there's something we call pioneering period. Even when you receive dividend or you pay dividend to maybe your investors, that dividend is exclusive of withholding tax. And as a matter of fact, if you even qualify to be a pioneer company, for example, you will be on tax holiday before it used to be 5 years. I think Finance Act 2022 made it 6 years. An initial period of 3 years at first, then you can apply for an extension of 2 years. That's 1 year, 1 year. But Finance Act 2022 made it, an initial period of 4 years. Then that means for 4 years, you're on what we call tax holiday. You're operating your business. If you what's the word? If you qualify to be a pioneer company. And pioneer company, there are certain things that would have been checked. Okay, what is your shares like? Do we have more of your management board of Nigerian descent? They have a lot of those things to check. And again, what you are doing, is it very critical to the economic development of Nigeria? Yes, if you qualify for a pioneer company, yes, regardless of the turnover. That's on it has a act that governs. We call it, I think, Industrial Development Act. It has a legislation that governs that one on its own. Because when you talk about tax is so wide that if I begin to pick some of them one after the other, we may still be here talking 1 hour and the likes. Because company income tax is there, tertiary education tax is there, capital gains tax is there, withholding tax is there, stamp duty and money levy is there. That's why you see that when you make a transfer above 10,000 naira, how much will you be? You'll be charged, I think, 15 naira. That's money levy. We call it electronic transfer levy. I think Finance Act 2022 brought that on board. Before 2022, check. When you make a transfer of 10,000 naira, you are not charged 15 naira. Do you notice? Yes, Finance Act, I think 2021 or 2022. That brought it. No, not the bank. Electronic money fund or levy is now shared between the federal government and governments in, what do you call them now? State governments and local governments. Yes, they have a sharing percentage. 2021, right? So it should be 2021. I know it's either 2021 or 2022 that brought the electronic transfer levy. So most of this Finance Act provision, after 2019, some other provision were added. We had 2020. Do you understand? Amendments. We had 2021. And as a business generally, whether you are a small business, you're a medium business, or you're a light business, these are some of the things you may want to gain an in-depth knowledge of. An in-depth what? Knowledge of is important. Yes. If they review it every year, that means there is a need. You understand? But this particular act, there is 2023. President Muhammadu Buhari signed it before leaving office, and it was operational. But the new president signed an executive order earlier this month or late last month. When was first subsidy removed? I think it's this month now. May 29, right? Yes, I think he now signed, no, it was after then. I think he now signed executive order. This is July now. June or earlier this month. That, okay, let's suspend the implementation of Finance Act. There were a lot of acts that were suspended till maybe September, but I know of this particular provision, some provision in Finance Act 2023 to September to ease the burden of some of these policies. How do I get what? You can read Finance Act. It's everywhere. You can get it. Finance Act 2019, 2020, 2021, 2022, 2023. It's everywhere. Just put it on Google. Finance Act. You'll find it. You will read. You will read. If knowledge is power. Application is powerful. Of course, there will always be a circular issued by FIRS. Everything still, for example, now, that's one of the duties of FIRS. You can walk to any of their office around you. And I'm sure they also have seminars too for businesses. So you might just want to get yourself accustomed to it and see if you can be attending. And again, if you don't want to stress yourself, just we are in an era where you can get information anywhere. You can just put somewhere, summary of Finance Act 2023, or what makes Finance Act 2023 different from 2022? What are the new additions? You find it online because we have researchers writing on all these topics almost every day. Like I was discussing one, there has been arguments that this tertiary education tax this tertiary education tax moved from 2% to 3% in the space of 2 years. There's been argument that it's not supposed to be. It makes no sense. That you want to see how you can fund institutions. It's not about increasing it because you are creating more burden for businesses. In fact, one of them argued that people will be discouraged to come and invest or do business in Nigeria. When you look at all the taxes you are paying, you make a profit of 100 million. You have paid about 50 million in tax. What is left? Those were the argument of some researchers. Do we understand? So it's important. So, like I said, you become a medium company when you, what's the word? Once you exceed 25 million threshold, 200 million. And at that point, Finance Act says you will pay company income tax of 20%. Yes. 20% of your taxable profit. There's a way we calculate taxable profit. I don't think I can do that in this class. Don't worry, just get an accounting person on your team, because I'm not teaching ICANN students here, so I cannot be saying let's calculate adjusted profits. And it might be strange to some of us, especially if you are not from accounting background. You might just walk out. So, I mean, it's important. So, once your turnover is 25 million and 100 naira, you become a medium company, you will pay company income tax of 20% of your taxable profit for that year. And also, provided the 20% of that your taxable income for that year is not lower than minimum tax provision. Because there is minimum tax provision. Minimum tax that a company is expected to pay. Right? So you pay 20%, but majorly I don't think that applies to medium companies. That applies to these guys, large companies. So you pay tax of 20% of your accessible profit, then you pay tertiary education tax. Before now, when Finance Act 2019-2020 was saying, okay, if the turnover is 25 million to this, they are paying CIT of 20%. Finance Act, I think 2019 and 2020 did not make mention of tertiary education tax. And I told you, that's law for you, regulation for you. And that's how we do. No, I mean, people want to see the loopholes of the law to see how you can advise your clients to minimize their tax liability. Abi? So it was after then FIRS now issued a circular to say Once you are a medium company, you also pay what? Education tax. Finance Act was silent. It just made mention of, okay, once your turnover falls between this and this, you pay CIT of 20%, right? So you have to pay, and that is why, and this is the recent rate, that's why I'm putting 3%. This is the recent rate by Finance Act 2022, signed on 31st December 2022 by President Muhammadu Buhari. So I'm not putting the 2% because by the time you start checking online, you may see 2% and feel like, oh, what did this just tell us? So this is the updated rates. So you pay 3%. The same thing applies to this guy. Sorry, I forgot to include it here. This guy too. Once you're a large company, your turnover is more than 100 million. It shows that you are doing well. It shows that what? You are doing well. And once you are doing well, you pay tax. You pay company income tax. No, not that. Can we go back? We pay company income tax, right? Company income tax of about 30%. And you also pay tertiary education tax of what? 2%. Yeah, 3%. Sorry. Yes. That's what the provision of the Nigerian law says, Finance Act. So before I proceed, do I have any question? Quickly? I know there will be questions. If it's tax, there will be questions.
I want to ask, why is VAT? A company that wants to charge will add VAT to their charge for a client. Why the clients that want to pay will want to take a withholding tax? So I don't know how. As in, I want to, because I'm trying to why this person is trying to get tax, and you are trying to make sure that you don't pay. That's what I see, the person don't want to pay the VAT. And most times withholding tax is always more than the VAT charge on the money which the client is supposed to pay. So, yeah. Well, what's the difference between VAT and
okay? When you talk about value-added tax, like I used to say, although I'm not in a class teaching, but I know I'm permitted to say that here, you don't need to bother or cram it. Value-added tax. You are paying tax because a value has been added. Do you get it? So let me break it down. If you produce cosmetics, I don't know, maybe that's the example we're making throughout today. Cosmetics, right? I don't even know what is required to produce it. Maybe aloe vera, right? Am I correct? And if I'm not correct, please take me like that. So maybe aloe vera, right? Once you buy that aloe vera, you are paying an amount of money, Abi, and a VAT will be charged. That is called VAT impute. What do I call it? VAT imputes. So when you add value, you cannot go and serve the aloe vera to your client now. You have to do some kind of transformation and all of that. There's an amount of money that will be spent, Abi. That amount is what we call what? The value you have added. Abi, on that value you have added, when you are done, you'll be selling it again. Abi, once you sell it again, VAT will also be calculated. That will be what? The what? VAT output. So in the hand of a taxable person is somebody who is liable to tax. Once your business is maybe a medium company now, that means you are a taxable person, right? It's under the law. You have their list there. If you're a company, you're an individual working under personal income tax, but let's not dive into that. So at the end of the day, you now get the difference between your VAT output and your VAT inputs. So that's what you now remit as tax. So do you understand? So in that way, you are provided for the one you have paid, right? The inputs when you went to buy, and the one you have charged for selling. So it's a difference you now remit. There's something we call self-assessment. Every company is allowed to I don't know if there's any word like that, self-assess themselves. I don't know English. If you study English, please manage it. Self-assess themselves, right? Yes. What does that mean is that self-assessment means that you can assess yourself to tax. All you just need to do is to submit it with your what? We call it filing of returns to the relevant tax authority, in this case, FIRS. So they will now scrutinize, go through it. And in most cases, before companies assess themselves to tax, they also have what? Of course, you must have had an accountant who has the knowledge of all these things, the relevant provisions and all. So if you assess you to tax, at the end of the day, by the time you get to relevant tax authority, in most cases, if your tax professional or accountant has done the right thing, then that will be the value of tax you paid after they've done their own analysis as well, based on the books or returns you have submitted. Do you understand what I'm saying? So that's how VAT works. Then and also VAT, although, we have VATable goods. VATable goods are goods that once you purchase them, they are liable to pay VAT on them. And we also have VAT exempt goods or non-VATable goods. Example of non-VATable goods is educational materials. Baby products. Check, when you buy a baby product, nobody charge VAT on it. That's what Value Added Tax Act 2004 as amended says. Yes, education products, baby product like napkin, even some basic food item like beans, gari. Yes. No, value added tax is not payable. They are non-VATable goods. Do you understand? Have I answered your question? Yes. Then when you talk about withholding tax is basically on income, and in most cases on dividend. Yes. For example, if you hold share in a company, say maybe MTN, once they pay you your dividend, the dividend you receive is net of withholding tax. That's why you see sometimes when you receive dividend, you'll be seeing something 0.14, like a figure that is not a round figure. Withholding tax has been charged. So it is now the duty of MTN who charge the withholding tax to now remit it to who? To the FIRS. Do you understand? So withholding tax is basically on income, your dividend. Why VAT is on, we call them supplies. Any goods that is VATable, we call them supplies. Are we good? The class don't become fast.
Yeah, so 2 questions. One is, so as long as you are under 25 million, even if it's for 20 years, you remain. So that's where you stay. Then second one is, it's kind of similar to what you said. I don't really understand so much of VAT income. I don't know what income. Withholding task. I can't define it. I don't know what it means. But sometimes when I want to do a project for a client, and then I put VAT. So they ask me to remove it, that they will put it on their hand. Is that what withholding task is? Yeah, that I wanted to add tax. They won't pay me, sure. I was going to. No, what I'm saying is, I wanted to add tax to it, so I build them, so they pay everything. I can go and remit my own task. But they asked me to remove it, the tax. VAT now, just VAT. Yes. So what is happening there? And then, so how do I do after that? Like, what do I return? Since I wasn't able to add tax to my own, so what do I do? Like, I don't know if it makes.
All right. So I think the first thing I need to first understand is that you have a quotation, right? And you send it to them. Say you want to supply them some things, Abi, right? $7.5 is VAT. It used to be 5% before. Okay. That they will charge it on their end. And that means they will be the one to remit the value added tax. Do you understand? So for you, you don't really need to do anything in that situation. But probably another thing again is that, like, for your business now, do you remit tax? They are like that. They will ask you that they will be the one to remit it. That means in that case, they are probably seeing your business as maybe more or less like a small business. Yes. So in that situation, they will be the one to remit it, because at the end of the day, who is paying you? They are the one. And any payment made for service rendered falls under the withholding tax schedule. Yes, it's an income. To present VAT, that's another angle. That's another angle. Okay, this is what I will suggest in that situation. What I will suggest now is that maybe you visit the nearest FRS office. Yes, maybe visit the nearest FRS office and just tell them this. Because if you ask me, in that kind of situation, when you don't have maybe a VAT certificate and all of that, in most cases, you may still have to visit the relevant tax authority to now write a letter for you to show that, oh, maybe you fall under the small company, and as a result of that, do you understand? Some sort of like a recommendation letter in that situation. Do you understand what I'm saying? There are situations where companies, because the grant you're applying for might not be a local grant, and they might not be very, very accustomed with our system. So in that situation, you may also want to reach out to the relevant tax authority to see, but I'm sure that if as a small company, you are not paying that, then what they will do in that situation is to see, after you submit all the necessary return, then they can give you like a statement that shows that, oh, you are, according to the provision of the Nigerian tax law, you are exempted from this, It will be accepted since it's coming with a seal. You're supposed to what? Yes. Normally, I don't know why that company is saying that to you, to be honest, but normally, it's supposed to be part of your returns. I've said it before. Whether the fact that you're a small company does not mean you don't file returns, right? Return means that everything that's transpired, your income, the tax payable, everything. So if you are not paying tax, it is now the duty of the FRS to now what? To now refund, as the case may be. But you are entitled to file a return. So why that company is saying that, I don't know. I don't know the reason behind that. And possibly, like I said, there is tax avoidance, right? And everybody wants to what? As a business, one of the things you want to do is to minimize your tax, because you cannot see yourself working. You made about 100 million as profit, and at the end of the day, when tax was calculated, it's about 50 million naira. Do you understand? So I don't know. That's why I really don't want to conclude. I don't know why that particular company is telling you not to include it, that they will include it on their end. It could be due to several reasons. It could also be due to what we call double taxation. Yes, because one of the things, tax legislations, one of the things we're trying to achieve is to make sure that an income is not taxed twice. Do you understand? So that situation is kind of dicey. Let me use that word. It could be because of maybe double taxation. Probably that income has been taxed before, and they don't want that income to be taxed again. And if you check Finance Act 2019, for example, if you are a business before, when you are commencing business for the first time, your first year of commencement, the basis period you will be assessed to tax will be from the date of commencement to 31st December of that year. The second year will be from the date of commencement to the next 12 calendar month. In that next 12 calendar month is 31st, the previous period, which is from date of commencement to 31st December. Is it not part of it? It's part of it, Abi. That means some income will be taxed twice. And that's that's why I just said, I'm discussing this Finance Act as it relates to this. That's one of the provision of this Finance Act 2019. So now make sure that income of companies, particularly companies who just commenced operation, or even at the point of cessation of operation, are not taxed what? Twice. Do you understand? So it's one of the two. Online. Okay. It's the same thing. Yes, it's just English. What tax exemption do you get as a result of CSR? That's a deep question. Well, when you say CSR is corporate social responsibility. And it means that how that works is that as a business, when you operate in a particular environment, it is assumed that there will be some social costs. Social costs means that by virtue of your operation, your immediate environment can be affected. For example, if you go to the Niger Delta region, for example, I know that their land is not fertile to grow anywhere there's oil exploration, right? That's why you see that in Nigeria, we have NDDC, Niger Delta Commission. What do? They make sure that some of these monies, we have an amount of money that is apportioned for these communities to make sure that maybe they provide infrastructures. In fact, it is in that region, for example, if you have a sibling in tertiary institution, for example, and you're studying engineering and the like, it is in that regions we have the highest paid scholarships. Some of them pay as much as 500K per session. Some of them pay as much. I have some couple of, during my undergraduate, I have some couple of engineering guys. Some of them collect as much as 1 million naira in scholarship. Yes, there are scholarship. Shell, Chevron, Agbami, to mention a few. In just scholarship to support whatever you are doing. And most of them, I mean, I finished from Unilag. Before the school fees, I learned now that the school fees has increased. As of last time, how much was I paying? Maybe 14K or 15K or 12K. Do you understand? So imagine somebody collecting 1 million in scholarship from, and he's just paying 15K as they live large on campus. Do you understand? So let me go back to that question. So when a company is into corporate social responsibility, yes, they are advised to disclose it on their financial reports, and they have reward. For example, I'm aware of a schedule of a particular schedule in Company Income Tax Act that talks about donations. Yes, donation is allowed for a company as long as it is the whatever you are donating it to is within that schedule, maybe an educational institute, maybe this and that. And I know that I think there's an exemption that says that the donation should not be more than 10% of the accessible profits. Do you understand? So for a company who is into CSR is allowed, I think, to the maximum of what we have under that schedule as it relates to donation. So you cannot take all your profit now or carry all your profits and say you are doing CSR. You're on your own. Once it exceeds that threshold, what happens? Any amount exceeding that threshold, you'll be charged to tax based on that. So CSR, in fact, as a company, as a business, it is mandated that you should have corporate social responsibility. And again, should I even tell you the truth? I've had some couple of friends who had gotten international opportunities. One of the things that helped them, not even as a business now, as a person, maybe some of them to maybe work in World Bank, some of them in maybe get a scholarship to some institutions overseas in UK and like. One of the things those guys prioritize is your attitude to give back to the society or the community you belong to. And that is in a way under corporate social responsibility. I'm talking about it as it pertains to an individual now. That's like corporate social responsibility. You have to do something. That's why I say even some of these grants in your whatever, your application, some of the things they want to see is, what have you done? Okay, you make a profit of so. Do you have any track record of maybe going to somewhere in Lagos? Maybe say this common place people normally go. I've been there too before. Makoko, you go and buy educational materials and you're sharing. You take pictures. You're giving back to, because it's part of the XDGs by UN, achievable by 17 SDG goals. That there will be what? Education. That's one of them. Or you are doing anything that improves the health and well-being of people. Do you understand? So corporate social responsibility is sacrosanct. And it's not negotiable for a business. You have to give back to your society. Are we good? Any other question from? Most of the other question. All right. Thank you very much. So large companies greater than 100 million pay tax of 30% and what? And the company income tax rate in Nigeria presently is what? 30%. For a normal companies. Go and check the annual report, 30%. That's company income tax. So I'm not talking about other taxes. So company income tax. And these guys too are supposed to pay tertiary education tax 3%. I'm supposed to include it. It's an oversight. Yes, next, please. We have dwelled so much on this. Accounting records. Why? What is accounting records? That's what I'm trying to discuss here. What do you need to know about accounting records? Accounting records are all documents involved in preparing financial statement for a business. Yes, you need to keep accounting records to be able to prepare your financial statement. I'll still tell you what financial statement is. Let me get there. And what every account or record you keep, I will tell you where they are to fall. We have about 5 of them that they will always fall in any of these 5. when you are preparing them. So that's what you need your accounting. So that guy you see at the grocery store that writes sales 1,000. I sold 5 packets of sweet. What the person is doing is what is keeping records, accounting records. So somebody now picks it up from there and will prepare it in form of a financial, that thing we call accounts, financial statements. So now say, okay, over this period of time, this is the profit of this business. Over this period of time, this is our equity. Over this period of time, this is our revenue. Over this period of time, this is the value of our assets. Do you understand? And you can now use that to make decisions. And also, there's also a section of this we call financial statement analysis to make decisions. For example, when I say, what is your return on equity, return on assets? That can be used as a metric to measure how you have been performing over the years. But I don't want to dive into that. So certain regulatory bodies require businesses to keep the accounting record for several years in the event that they need to be reviewed. One of the things I want to emphasize as a small business is that you are required to keep your accounting record, and it has to be complete. There's something in auditing we call completeness, accuracy, and validity of financial record. Even when an auditor is trying to look into your financial report, one of the things they are looking out for is what? The completeness, the accuracy, and the validity of those records. Are they complete? Over the years, you should be able to keep a proper books of account, whether you are a small business or not, because at the same time, you never can tell where or when those books of accounts can be needed. For example, do you even know they do tax audits too? There's something known as tax audits. The tax authority can just come, want to just do a tax audit. Let's check. What's your profits 2 years ago? You say, me, no, I don't have profit 2 years ago. It's only this year I have. Once I'm done with 1 year, I'm done here. You put yourself in trouble. So you should make sure that whatever you are keeping has to be what? Complete, accurate, and valid. Have CAV is important. An accounting record are often reviewed for audits, complete compliance check, and other business-related necessities. Audits, you know what audit is? One other thing I used to ask is that all auditors are accountants, but not all accountants are auditors. Explain. Yes. Because I teach accounting. So sometimes when we want to throw some kind of question that when you first see it, I like that kind of thing, for example. When you first see the question, like 2 minutes, you are still thinking. You are not just seeing the question, you pick your pen, you are writing. No, like 2 minutes, you are still thinking, what is this person asking me? All what? Auditors are accountants, but not all accountants are auditors. You said, sure, oh, yeah, expose. I know you know it.
No, I don't know it. I'm just thinking about it. I think for auditing, there's some, investigative side of it. It's like forensics and things like that. And I know it's not traditional accounting. So accountants are traditional. So auditors go beyond that to almost becoming like CIA of, like different, of finance of accounts. That's what I think.
Yes, you want to say something? I know. Yeah, tell us. Give it to us.
No. The way I'll put it is an auditor is an investigative accountant. Because an auditor is the person to go through the records and see where the loopholes are, why the account is not balancing, where there've been some fraud and all other things. So that is what the auditor is to do. The accountant is just to make sure that there's this account balance for this year.
Oh, thank you. Another person. You want to say something? Okay.
No, auditors are okay. Accountants are people that works within the company, while auditors are outsider that comes to oversee their activities. This is of the accountant.
I love that because for the public company, like a large company, for example, it's mandated by the Council that they should have what we call an audit committee. And every year, an external audit comes. I just want to address that. Okay, just to shed more light on an external audit. An external auditor comes to audit the financial statement. That's what the likes of KPMG does. I've intended here before, for example, when you prepare your financial statement, because the law says that every company in Nigeria must remit their tax at least 6 months. That's 180 days after the financial year end. That means your financial year end ends December 2023. You're expected by June 2024. You must have filed all your return. If possible, you must have paid your tax obligation. So when a company submits a financial statement, one of the things, that's why you say check the financial statement of company like MTN. They either check the big fours. If not KPMG, it's going to be PwC. If not PwC, it will be EY, Ernst & Young. If not EY, it will be IBDO. If not IBDO, it will be, what's this fourth one? Deloitte. That's external auditor. So, of course, companies have internal audit department, big companies. So the internal audit department is to make sure that, to also have a check, to make sure that everything is done the way it's supposed to go. External auditor will now come because that is what the law says. You must have external auditor visiting a public limited companies. That's what CAMA says. If you're a small business, you're exempted. As a matter of fact, if you're a private company, you're exempted. Because a private company is not mandated by CAMA to even publish your financial statements. But a public company will publish its financial statement. Check any public company website, you'll find their financial statement there. Because CAMA says it must be what? Published. That means everybody must see what has transpired in your organization for the period under review. Do you understand what I'm saying? So I love your definition, but you took it out, which is external auditor, and I love that. At least it triggers something in me. Yes. Sorry.
How often do external auditors audit your company if you're a public limited liability company?
All right. He said, how often do external auditor visit? According to the law or because it's another thing for the law to say something. You might not be going outside the law if you decide to feel like this is what works best for your company. Do you understand? For example, if you tell me that I'm supposed to remit tax before 6 months, I can decide to say I want to be remitting my tax every April of every year. I'm not going outside the law. I just feel that's what works for me. And that company can say, I want to I want to pay my tax May. What I'm saying is that normally, companies, external auditor visits only once. We call it end of the year audits. What do I call it? That's what they do. That's why you have internal auditor. Internal auditor is to make sure they exist as part of the management of a company. They have to make sure that as all those things are going on, they are checking to see. That's why there's something we call continuous audit. There's something we call end of the year audit. Who carry out continuous audit? In most cases, your internal auditors can do that. But end of the year audit is like the master audits. If there's any word like that, when you say master key, master audits, they now come and check everything from January to December. Yes, every year. That's what the law says for PLCs, public limited companies. Private companies is not mandated by law. That does not mean they cannot decide to have auditors. But CAMA did not say, Nigerian regulation did not say they must publish their financial statement at first for the public to see, not to talk of having an audit committee. But what do you call it? CAMA mandated for public companies. And in most cases, the audit committee is usually composed of the composition is about, I think, six members. And the chairman appointed at the annual general meeting in most cases. The director determined that. So let me come back to answering that question. So when you say, like all of you have given me the best of the best definition, I'm serious. As a matter of fact, if probably you don't have a finance background and you've said all these things you have said, I'm moved or touched to believe that, you are sound. So when you say an accountant, why I say all auditors are accountants is that before you can even be an auditor, you have to be an accountant in the first place. Before you can catch a thief, you have to be a thief. I'm sorry, I have to use that example. Or you have to understand maybe I should not say that. You have to understand I'm serious. You cannot work in, say, intelligence unit. For example, all these SSS, DSS, for example, if you don't know all these things. That's why you see when people were shouting, was talking about this SARS or something, you see that most of those guys, if you check them, they understand all this criminal intelligence. For example, if they meet a criminal and you are lying, they know. Do you understand what I'm saying? So what I'm saying is that for you to become an auditor, you must have been an accountant. And to now speak on your definition, The primary objective of an auditor is not to detect fraud. As a matter of fact, I can follow an audit team to go and audit a company. If I did, the reason why you are calling me is not to come and detect fraud. My primary objective, that's why I will give all of you here assignments. Go and download annual reports of it just for your own knowledge, because your business will go places, of course. So go and download annual reports and see what it looks like. You will check, you see before the statement of profit or loss, before the statement of changes in equity and statement of financial position, you see auditors' report. And their report is to say whether the financial statement shows a true and fair view. To detect fraud is a secondary assignment. My own is to come and check to say, okay, all these things these people have recorded, truly it shows what has happened. Yes, that's my job. But it's not as easy as that. I have not just read it. I had been at where it was performed. It's not because sometimes before you go to the client office, sometimes we might have to go and examine. You say you bought this fan when? Last year. Where's the receipt? Oh, it's 4 million. Sometimes you even discover that the assets they said they bought is not even in the premises of the company. Maybe it's one of the MD that's using it to be what's this for commercial purpose from Ojota to K2, and they bought it for the business. So it's not as easy. I'm just saying that to let you know that it's not as easy as a true and fair view. You must also do your check. That's why if you see something, you say compliance check. Compliance check means that you want to check if everything being done in financial statement is in tandem with the provisions of the law. That's compliance check. There's something we call control check. Control check is that everything you have done, is it in line with the internal control measures of the organization? Because the management can say that our control measure is that, for example, let me give you an example. For example, before you can say that a payment is successful, the first thing is that there has to be an initiation of the need for that thing, maybe from Department A, writing finance. I'm just telling you in practical terms. The stage is that you first write finance, stating what you need, Abby. Finance, or if you have a production department, you first write, no, not production. There's a name, maybe purchasing department. So you write purchasing department. We need procurement. That's the word I'm looking for. Thank you. Procurement department. You need to get a fan because everybody that comes here are always complaining of it and not. It's just an example, of course. Then the department that needs the fan, right? Procurement. Procurement. I'm just talking about the process. So procurement could say, okay, the next process could be that on the control measure is that the next thing will be that procurement will now write finance, telling finance the resources required to get that. After procurement has confirmed whether they need it or not. Maybe finance will now sign. I'm telling you, that's why sometimes the more an organization becomes bigger, the higher what we call the bureaucratic process. Sometimes the process of getting some of these things might become more tedious. Because I even remember an event we did some time ago. It's a summit that I anchored to get fund from a particular company. It's one of the big fours. We wrote them to sponsor the event. It took nothing less than 70 days. And that's the normal process. Because it will be moving, and those process has to be followed. That's exactly what I mean by internal control. So another thing we want to check as an auditor is, in all these transactions that have been recorded, do they go through these processes? Because if they do not go through this process, it shows that somebody is compromising the process somewhere. Do you understand? So what I'm saying is that the primary function of an auditor is to what? Is to what? Write an opinion, whether the financial statement shows a true or fair. That's why I say you should download an annual report, you will see. Of course, in the process, yes, annual report or financial statement of companies. Public company, you find it online, MTN, Boa Cement, any company listed on the Nigerian Exchange Limited, about 150 something of them. You can find the annual report online. Now, you can now say, okay, it shows a true and fair view and all of that. So for you to be an auditor, you must have first been and again, as the regulatory body in Nigeria, that's ICANN, as it has been prescribed, for example, you cannot even be an auditor if you have not, I think, practiced for at least 5 years. Yes. 5 years. If you have not at least practiced as 5 years, you cannot be given a certificate to be an auditor because there is a certificate that is issued to that effect. Do you understand what I'm saying? So all auditors are accountants because before you can become an auditor, every auditor you see have a certification in accounting, whether a degree certification, whether a professional certification, or both. Do you understand? So all auditors are accountants. Let's leave that. So your accounting record is important for compliance check to see whether you are compliant with the relevant provision of, say, CAMA. How would I know what your turnover is, for example, to know whether you qualify to be a small company or not? If I don't have access to your accounting record, think about it. How would I know? So that is why it's important. And for other business-related necessities, maybe grants, blah, 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 blah. Next slide, please. Okay, bookkeeping terms that you need to know. These terms, you need to touchlight them. You need to know them. So number one is assets. What are assets? Everybody have been talking about what asset is. At one point or the other in our life, we've had, that thing is my asset, isn't it? So, but when you want to, let me define in a layman's term first. When you say assets, you're talking about what belongs to you, right? In the place of a company, you're talking about what belongs to the company, right? But when you want to define it in a more, maybe a bit professional way, you say, when you talk about assets, you are saying assets are properties incurred as a result of what past events, and from which future economic benefit is expected to flow into the company. Let me explain that. If I go and buy this chair, the resources is I'm parting away my resources, right? With my resources, right? Right? Am I buying it just to buy it? I'm buying it because I'm expecting what benefit from it. Do you understand what I'm saying? So when you talk about an asset, you are talking about any property you have acquired, right, as a result of past events. You paid for it, and of which is expected future what? Economic benefit. You expect that future economic benefit flow into the what? Into your organization. So anything your organization owed is an asset, and that asset can either be a non-current asset or what? A current asset. Before, they used to call it fixed assets, right? But the advent of the likes of IFRS, that's International Financial Reporting Standard, which I will still maybe talk about briefly. So we now have non-current assets are assets that you expect that should last more than one accounting period. For example, this chair now, you expect that it should last for more than one accounting period, right? So it's a non-current asset. But there's one accounting standard called IAS 16, International Accounting Standard number 16. They are the one that govern the presentation of financial statement. You group all those non-current assets to what we call PPE, property, plant, and equipment. Whether it's fan, whether it's equipment, whether it's plant and machinery, whether it's motor vehicle, everything is grouped as what? PPE, property, plant, and equipment. And it is how you will recognize them. You have it under International Accounting Standard 16, because we have standard that governs how we report financial statement. From IAS 1 to 2 to 3 to 4, even to IFRS, because what we usually have before is IAS, International Accounting Standard. From there, we now have International Financial Reporting Standard to now review some of those standards, right? So that's IAS 16. Then when you talk about liability, yes, liability are obligations. We all know what liability are, right? And your liability could be either non-current liability or current liabilities, right? Current liability are those liabilities you incur within an accounting year. That's within 12 months. Why non-current are for long term? For example, if you go and secure a bank loan payable over 4 years, the maturity period is 4 years. It's a non-current liability, because you are not. It's a liability that will span across how many years? 4 years. So it's more than the current accounting period. So you disclose it as a non-current liabilities. We need to learn this thing. I know at the end of the day, you may not be the one doing all this recording yourself, right? But you need to understand how this works, so that even by the time you have someone doing it for you, and you can even do it. I mean, I've had people who did chemical engineering and is doing well in accounting today. In fact, he's a financial reporter. You can write professional exam. You can decide to go and write ICANN. You get accustomed to it. But just that sometimes for people who don't have accounting background, there used to be some lapses. But once you can scale the Odoo and learn it, of course, we have a lot of people in the engineering fields who are also chartered accountants. Make your research. So you can also do all these things yourself. It's not a big deal. So examples are there: bank loan, payables. Like, yes, payables are like your creditors. Creditors are Maybe people who supply you your inputs to produce whatever thing you are producing, and you are yet to pay them. They are your payables, creditors. When you talk about receivable, which is under current assets, I didn't give that as an example. Those are your like your debtors, those that are owing you, right? So income. So when you talk about income, of course, we know what income is. They are all monies you receive as a result of what? Engaging in an economic activities. I will not waste time on all these things because I know there are things, at least in one way or the other, we, Abby? Yes, the next one is expenses or expenditure. Why did I say expenses or expenditure? Because sometimes they use expenditure when it comes to a non-profit making organization or a government-related account. Instead of saying expenses, they say expenditure. It's still the same thing. Sometimes instead of saying income, they even say revenue. But sometimes if you want to now begin to do an in-depth study, you see that maybe there's a small difference between income and revenue. When you talk about expenditure, you are talking about all the monies you spend to operate your business. For example, to host this particular seminar or session we are hosting now, some expenses has been incurred. Maybe to provide lighting, maybe to pay the facilitator, maybe to, amongst other things, expenses have been incurred. Those are your expenses. And one of the most important things is that you should be able to keep track of your expenses as a business. It's important. You should be able to keep track at least your income and your what? Expenses, and know how you are doing. Over time in Nigeria, we have realized that due to maybe the low knowledge about accounting, we have realized that even businesses will, for example, our mothers now, for example, when they receive money, of course, they don't understand that there's a difference between your business income and your income. And even among entrepreneurs of nowadays, I've been to seminars where I ask questions like that, and they're like, Shebi is my money. But it's not so. Everything about your business should be distinct from you. If your friend came around and maybe you are selling drinks, and your friend sat down and said, entertain me, and your friend carried two, you say, don't worry, even if you carry it, it's still my business. You are expected that you are supposed to account for even that too. Probably paying from you, because in accounting, if you fail to do that, we assume that is like drawings, and drawings reduce your equity. Equity is like your capital. And that's why you see a lot of, in fact, there have been reports. The reason why a lot of business fail in Africa is because we don't understand all these things. You don't understand that there's a difference between your business and you. In fact, I remember even while we were young, my parent, for example, because she owned a business, I remember then, even when it's Christmas time, you want to buy clothes from me, it's from business money. They say, don't worry, there's a way you will what? And we still have entrepreneurs of nowadays doing that. So it's not one of the best practices you may want to be caught doing. Ensure that you account for your business separately from any personal. That can happen, but make sure you provide for it. Next slide, please. Nice. We'll soon go on break, maybe in like 15. Or let me see if I can finish this basic concept, then we'll go on break. Then when I come back, we'll talk about the rest. And I will show you maybe one software that you can use. There are many of them, but most of them are online, because we are now beginning to look at what we call cloud accounting. That's an emerging field in accounting now. Yes, and that's what most businesses use. They have like a software where they record all this in, like Sage, QuickBooks, but I will not touch that, because if we are to teach that, that's a class on its own. Right? So what I will just touch is maybe Excel, because of course, Excel is what you can find anywhere, offline, even on your phone. So I'll just touch Excel, but the files I came with, but I will create some other transaction and illustrate that. So what are the other things you need to know? Yes, cash flow. Cash flow talks about the movement of money. And we'll still have a class activity. I'm going to ask something, and it will involve everyone here to discuss. It's a class discussion. And I will need to get our input on that. So when you talk about cash flow, you're talking about the movement of cash. That is why, which I'll still talk about, when you talk about the financial statement required in financial report, one of them is cash flow statement. What do I call it? Cash flow statement. And cash flow statement record both your what? Anything that involves receiving money. Because in Nigeria or in the commercial sector, we have two bases of accounting traditionally. We have cash basis and accrual basis. Cash basis is what government uses. Why accrual basis is what commercial business use. What does accrual basis mean? It means that sometimes you even recognize a transaction even when you have not received money. For example, if you sold goods, if you sell goods to someone for 20,000 naira and the person says, I will pay tomorrow, accrual concept require of you to go and record that sales. At least you are parted with your goods. But because the person is your customer, you know the person will pay. By doing that, that means that you are recognizing a revenue item when it is what earned and not when it is received. Do you understand what I'm saying? It means that you are recognizing an expenditure or an expenses when it is what incurred and when not when it is paid. That means that you can also go to a place to get a service from someone and you tell the person you pay the person later. That's an expenses. You can recognize it in your financial statements. Why? Because you have enjoyed the service already, Abi. You are obligated to pay. That means you have incurred it, although you have not paid. That's accrual. Do you understand what I'm saying? So, but when you talk about cash flow statements, it's majorly based on cash basis. Even when somebody tells you you sold goods to someone and the person has not paid you, you don't recognize it. When it comes to cash flow, anything that enter this cash flow statements has to do with what? Receipts, actual receipt of money, or what? Actual payment of money. Anything short of that will not be in cash flow statement. Then the next one is accounts payable. Yes, I've discussed that already. When you say account payable, it means those are the people that you are obligated to pay. Example is your creditors, Abi, people that owe you, and it's a current liability. So the next one is revenue. Yes, sometimes people used to say that there's a difference between revenue and income, maybe so closely. But in most cases, when you talk about revenue is usually used in most cases when it comes to government entity. When you say revenue, what are you saying? You are talking about the income you have received, isn't it? And sometimes when you are reporting for a private company, sometimes your revenue could mean your sales. The money you have received from what? From selling your goods and services. Then the next one is account receivable. Yes, account of individuals owing your business. I've said that. The common name it used to be called is debtors, right? Those that are owing you, right? Your customers that are yet to pay, right? Next. We are wrapping up soon. You still have more? Wow. Equity. When you say equity, equity is like your capital component of the business. Every business has an equity component. As a small business, if your uncle give you 10,000 naira to start a business, it's part of your equity. In a layman's word, if you discuss capital, we say capital is the money you use to start a business. Abi? That's what we're talking about. But when you talk about a company, it becomes a bit complex. Or you have other addition. What do I mean by that? Because for a company, you have shareholders. So their shares, the shares of that company that have been subscribed to, is what is part of the equity component. Also, if the company decide to retain an amount of its profit, that's retained earnings, is part of the equity. And for individuals, so it happens. You can make profit of 10 million in a year, and you say out of that 10 million naira, I'm only spending 2 million. The 8 million, I want to take it back to the business. It is treated as retained earnings. And why is it under equity like capital? It means that you are infusing that money into your business again. So make sure that your business keep what? Expanding or growing. Do you understand? So So for a company, it becomes a bit complex because you begin to have even reserves. If you have reserves, maybe money you've kept somewhere that you did not touch, it will be part of the equity components. But we don't have time to begin to show that. Maybe before we go, if we have the luxury of time, I can download an annual report. I will show you all these things, where they are. Do you understand what I'm saying? And you'll be able to see them. All right. So you have a question quickly?
Must equity be linked with number of shares? Like you said something about your uncle giving you 10,000 to invest in your company, that's equity. So does that mean that some equity, as it were, might just be equity like uncle giving you money, and then some equity might be I give you money for a number to have a piece, like to be part of your shareholders, to have some number of shares in your company while I'm giving you this money?
Thank you very much for that question. So if I get you correctly, you are asking me what the equity component looks like, right? if if it is a one-man business or like your business, if your uncle give you money and say, this money I'm just giving you is my addition to your business, I don't want anything in return. That means your uncle, as it were, is not a stakeholder in that business. Because it's that money he gave you, if you are using it for the purpose of your business, it will be part of your equity. Even though your uncle does not have a claim over your assets. Because there's something we call claim. Every shareholders have a claim over that company's assets. What that means is that in the event of liquidation, that's in the event where you say, I'm no longer doing this business again, let's sell all the assets, let everybody find their way. Your uncle will not come and say, give me my own share. Will he come and say that? No. Do you understand? He just gave you. So he does not have claim over your assets. So in that case, he's really not a shareholder. It's not even a shareholder. But if he's giving you to say, okay, I want to buy so unit of shares in your company, of course, it's part of equity. It's also part of equity. But just that in this case, it's not just part of equity. He is also what? A shareholder. That means he has claim over your net assets. In the case of, and it's entitled to dividend. When you declare profits, you declare dividend, you have to pay him. Do you understand now? Does that answer your question? Does he answer your question? All right. Yes. So, general ledger. So, general ledger, the account you use to store, sort, and summarize all your transactions. Yes. You know, sometimes you say there are three types of ledger: sales ledger, purchase ledger, and general ledger. General ledger is every other account that you cannot record under your sales or your purchase. They go into general ledger. It could be your asset account. It could be your expenses account, as the case may be. Then when you talk about journal, yes, sometimes when we talk about journal, they say journal is the principal book of accounts, right? And what I use to explain that is to say, who is the head of a secondary school? A principal, right? Right? If students are fighting and the teachers cannot handle it, who would they take them to? Principal. What if teachers are fighting? Because I've taught in a school before. That's why I know that teachers can fight. They still go where? To the principal, right? So that means the principal accommodates everybody. The same thing, journal. Journal is a principal book of account. It accommodates all transactions. And it's like a summary that tells you which account is being debited, which account is being credited. By now, you must have heard about double entry principle, right? That says that for every debit entry, there must be a corresponding credit entry. Are you with me? All right. So that's journal for you. So it could be account receivable, account payable as the case. Then when you talk about trial balance is to test your arithmetic accuracy of your entry. Arithmetical accuracy. What does that mean? At the end of the day, when you have done all your double entry, posted to ledger, to account, to everywhere, your trial balance will now show whether there is an arithmetical accuracy. What does that mean? Is that by the time we add all the debit side, is it the same thing as the credit side? If it's the same, that's what the trial balance is testing. So it tests the arithmetic accuracy. It has to be the same. But do you know the funniest thing in accounting? The fact that your trial balance gives an equal figure, both debit and your credit, does not mean what you have done is correct. There can still be errors, yes. And that is where sometimes we used to suggest that whoever is manning that part of your business should be somebody who is experienced in that line. Do you understand what I'm saying? So, and when you say leverage generally, you're talking about debts. That is a concept on its own in business finance. Not all companies is majorly financed with the income or the money of the owner or shares in the case of a company. There's always a debt component. As a matter of fact, people will say, why will you incur debts when you can provide all the money? The point is that sometimes you need to incur debts to achieve certain objectives. But one of the things we usually canvass for is that even when you are introducing debt or leverage into the equation, ensure that in fact, some companies will like their leverage to be more than equity. Do you know why? Anybody who falls under this, who provide you with funds, in most cases, their claim on your asset is short-term. I'll give you an example. For example, if you have a debenture holder, for example, the claim might be short-term in the sense that, and in most cases also, this is very, very important. In most cases also, in the event where your business is liquidated, you pay your debtors first before you even pay shareholders. That's why sometimes even in investment management, right? Because I a little bit also very much in that. Even investment management, before you, if you say you want to invest, for example, one of the first things we want to confirm, I want to check is what is your risk level? Some investors are risk taker, some are risk averse. So for example, if you're a risk averse investor, we don't advise that you go and buy shares. If you know that when your money, you just wake up one day and you hear that the company have collapsed, once we know that the way you are doing, the next thing that will come to your mind is Third Mainland Bridge. We will not advise you to go and buy stock. Yes, because shares or stock is one of the riskiest form of investment. If you have a share in MTN, for example, if MTN collapses today, your money is gone. But if you fall under this, in fact, according to IFRS, I think that's IFRS 9, financial instrument. If you're a preference shareholder, for example, a preference shareholder, in most cases, preference shareholders are paid dividend even before ordinary shareholders because they are seen as being in this cadre. When you are an ordinary shareholder of the business, it means that you are a co-owner. You are a co-owner to the tune of that unit of shares you are holding. So the same way, shares is good because even in investment, there is a positive relationship between risk and return. The higher your risk, the higher the returns, expected return, and vice versa. If an investment has a higher risk, it means that the same way you can go and invest in stock. If you check the Nigerian stock exchange, as I'm talking, if you are reading the chart, you can buy a share of 10K, 10,000 naira. And let me give you a good example. For example, if you buy Airtel share, Airtel Africa, you know Airtel now. If you buy their share like 1 or 2 years ago, now you'll be in money. Do you know why? Because 1 or 2 years ago, a unit of share was sold for around 300, 400 naira. But now a unit of MTN share is, Airtel share is about 1,002. Check. So the same way your 10K can turn 100K overnight, the same way your 10K can turn 0 naira overnight. So when we notice that your risks, the level at which you can take risk is there are some people like that. They can invest, but they will tell you at least at the end of the day, let nothing do my money. Even if it's going to increase a bit, don't let anything. So those kind of people, you don't invest in. So why am I saying that is that when you talk about this leverage, they are part of the first claim. They have first claim on the asset. In the case where you, for example, if you take a bank loan, God forbid, and that business that took the bank loan is crashing, won't you pay? The bank will collect his money. That's why there is always a collateral. They will collect. So bank fall under this leverage. They will collect their money. So at the end of the day, maybe it's your shareholders that are now saying, after we have paid everybody, we discovered that there's not even money, or it's 5K that is remaining. How do we go about this 5K? Should all of us just buy Pepsi and drink and go? You understand? So these are some of the things that you may want to. So leverage is like the debt component of a business. So sometimes we advise that your business should not only be equity, it could be 25% debt, 75% equity. Or it depends on what you want to achieve, whether your business is growing or is at the peak, as the case may be. But in most cases, when business are at their potential, like they are at the peak, they are growing, most times, most of them use bulk of their capital structure. We call it capital structure in financial management. Bulk of their capital structure is usually equity. You understand? Because they know that today, when the business collapses, you can only claim to the tune of the number of shares you are holding. You cannot be paid more than that. Or in some cases, if you are part of the ordinary shareholders, it has gone. I bet you normally say it. There's a way they say it, it is gone. Yes. Yes. You've not heard about them before. Yes. They are not very common, but we have them, preference shareholders. They are also shareholders. They are not ordinary shareholders, but they are shareholders. But preference shareholders are paid after declaring dividend for ordinary shares. Let me give you an example. When you have a financial report, income statement, you have profit before tax. I fast forwarded any other thing you see before then. You have profit before tax. Abi, you have tax. Sometimes as part of the interest, you might have dividends. Sometimes we call them fixed interests. because their interest is fixed. Preference share is always on a fixed percentage, 10% preference share. That means you always get 10% of your stake. So in most cases, what you are earning as preference share is not changing. But it's only the ordinary share that can change. This year, if the company is doing well and they declare more dividend, they can get more based on their units. But for preference share, it's calculated as a percentage. So if this year the company is doing well, it's none of my business. You still, if it is 2K, you're supposed to get, you still get your 2K. Go and eat spag and be fine. There is a, how do I put it? There is a threshold for it. Say, okay, maybe this amount, you get 10%, this amount, you get this. And it does not mean you cannot have companies where they can work it out in terms of units. That's why I'm saying that it depends on what works for the business. And that's why, according to IAS 1, International Accounting Standard 1, that talks about what the general purpose financial report of the business should look like. One of the number 5 disclosure is accounting policies. The account policy of Net Factory may not be the same with Poise Nigeria. They might be offering the same thing or maybe close to what they are offering, for example, but it does not mean that their policy can be the same thing. Net Factory can say, my depreciation will be calculated based on straight line method. And every asset I buy will not use more than 4 years. The other firm can say, no, my own is on reducing balance method. All those things are allowed. In fact, in accounting, we call it creative accounting. What do I call it? Yes, there are ways in accounting we can help. There's something we call accounting engineering. Yes, there are ways in accounting when you study it, probably. But what I'm saying is that there are ways you can help business engineer their financial assessment that at the end of the day, it will show the view we want it to show. And we are doing it not against the law. We are looking at what is applicable to see. For example, if a business is using straight line method and reducing balance, if you're using reducing balance method, in the first year you purchase the assets, you will have higher depreciation compared to other years. And if you have higher depreciation, it means that you have less profits in the first year compared to other year. If we feel that you don't want the profits in that year to be more, we can say, okay, let's use reducing balance method. Is it disallowed? No, it's allowed. But we are trying to use it to see how we can make our profits show what we want it to show. Somebody can say it's illegal. It's not illegal. Yes, it's accounting policies. Do you understand? It's not illegal. So, having talked about that, yes. Shares and stock. Yes, you can use the same. For example, if you talk about US call it stock. They call it treasury stock. For example, the one for the government. Nigeria could call it shares. But when you are still talking about trading stocks, you are talking about shares. Do you understand what I'm saying? Majorly, shares. Do you understand what I'm saying? Do you understand what I'm saying? Yes, any other thing? So you can start trading stock. You understand? If you have the risk appetite. Yes, that's what we call it, risk appetite. Okay. Yes. There is, would I call it an AI? There are some questions that will fill for you, like real life situation questions. So it's your answer to them. For example, if I ask you that, it's just an example. Sometimes in job interviews too, I mean, some of these aptitude tests, I can ask you that, let me assume you are going on the way. You have 10,000 naira. A pregnant woman needs that 10,000 naira with a baby in the hand. You meet another man on the wheelchair, he needs that 10,000 naira. You meet another man who cannot, give me an example of all these worst case scenarios. What will you do? I'll give you options. You pick an option and somebody can say, okay, I'll give the woman that is pregnant because I love my mother. Someone else can say, no, I'll give the man on the wheelchair because I believe if he, do you understand? So there's a name they call it. I can't remember now. If I remember before the end of the class, I will ask. So sometimes those tests are administered to see. So from your, and that's why I call it, it's like an AI. It automatically tells us your behavioral pattern in percentage. Do you know? And there are a few questions too. We also ask to know, sir, you want to invest also amount, and your investment goal is to make sure that in the next 10 years, you don't want to work again, and you want to have something that will be paying you while you are not working. Okay, what if you have 100K somewhere, and maybe along the line, it becomes 40K? Your expression, why will it become 40K? Which kind of play is that? What kind of playing is that? You already know that it's a no-go area. But in most cases, there's something we call portfolio management. Portfolio is when you have in a particular a portfolio, different investment options: stock, money market fund, ethical funds, investment maybe in health sector. And why do we have portfolio? The reason is that all the investment options will not perform the same way. For example, if you invest in the health sector now, during COVID, you'll be eating money, because then people are trying to discover medicine and all of that. And the health sector seems everybody has hand sanitizer in the house. Everybody has, do you understand? So all these investment options, sectors do not perform the same way. That's why sometimes we have portfolio. And the reason we have portfolio is to be able to manage risk. Let me tell you the truth. Risk can never be averted. You can only manage risk. And I'll give you a good example. Staying in this building is a risk. What if it collapses? It's not a cost. I'm a Christian, yes. What if it collapses? It's a risk. So have it at the back of your mind that risk can never be averted. You can just what? Manage risk. Even what we eat is a risk. What tells you the nutritional content of what you drink, the manufacturer, what they are telling you, what tells you is what they tell you is what is inside. They tell you once you drink, where's that advert that I used to see? Maybe it's Milo. You just be jumping everywhere and be playing ball up and down. Who told you that by the time you drink it, do you understand what I'm saying? So everything is risk. So risk cannot be averted. It can only be managed. Sorry. All right. So I think we should go on break here. Yes, I think we should go on break here. Why bookkeeping and accounting? I see we have a lot to talk about. And we're supposed to end this class. So we'll do, as once we get to a point where I feel we cannot go further, I'll just move to the little Excel parts. I'll show you how you can use Excel to keep track of your record. At least you take something practical. Then the rest, you'll go and learn. So let's go on a break now. And I don't know, we'll get information from the head on when we will come back for our break.
30. So it's a 30 minutes break. This is for those online. But if person is too much, you would not even come early. No, it can't be 10 minutes because we're supposed to have like an interview right now. Yes, an interview. So it's like a testimonial video. Let me just set up. So we just do it. So yes. Yes.
The confines of the organization, right? So we have tax authorities. I've said it. In this case, FIRS. FIRS. When it comes to companies, the jurisdiction is within what? FIRS. Somebody will ask me, is it only companies? No. Even FIRS also collects personal income tax. But those personal income tax has to be people resident in Abuja and foreign individuals too. They collect tax, yes. Normally, personal income tax is collected by the state's Internal Revenue Service or Board for Internal Revenue, anyone. But when it comes to personal income tax of the armed forces, the federal government is the one who collects it. That's FIRS. When it comes to personal income tax of diplomats, when it comes to personal income tax of residents of Abuja, and personal income tax of foreigners in Nigeria, FIRS also collects it. Other than those people I've mentioned, if you're a person, an individual who is self-employed or who is under unemployment, you pay what? To the coffers of who? Of the state government, where your business is resident, right? Yes, you can see everybody needs, even this diagram says it. Everybody, even the lady on the wheelchair also needs to know whether I can go to the company for what? For what? I'm just kidding. Lenders. Example is banks. Yes. In fact, you cannot secure loan as a business. One of the requirements is your reports. You want to come and collect a loan of 5 million when your turnover for 15 years has not been 1 million. They will never give you. You are playing. So they want to be sure. Lenders, banks, they want to be sure if what your annual report is showing is sufficient for them to grant you that loan you are requesting for. So lenders are also interested. Another one is government agency. Yes, CAC. That's Corporate Affairs Commission. If you go and read CAMA 2020 very well, there's a section of it that even says that you file a report to CAC. If you change the location of your business, for example, you tell CAC, you let them know. Yes. Even when you are ceasing operation, they have to know. Because it's part of their jurisdiction. They're interested in what? The formation of business, the cessation of business as well. So you may want to also do that. The next one is what? Trade unions. I've said that earlier on. Trade unions, yes. Everybody belongs to one union or the other. If you are a non-academic staff, NASU, they have. ASU, they have. Even in your organization, every organization, I don't know, but a standard organization has a department called NASU, where all the members belong to, or a cooperative society where all of them belong. And what that society does is that so that anytime when there is any issues, as it relates to the employees, they can what? Table it before management. So they're also interested. If they check the financial statement and they feel that the company is doing well, they can also negotiate for a wage increase. Do you understand? Like what I was saying, now with this fuel subsidy that was removed and the price now going to 617 naira, if I'm correct, in places like Lagos and Abuja. For example, trade unions like either at the national level or at the state level, like Nigerian Union of Teachers, or Trade Union Congress of Nigeria, TUC, Abi, or NLC, Nigerian Labour Congress. You can see them on the street tomorrow protesting that no, we no go agree. Do you understand? So they need information from the financial report. And the financial report of the government in this case may be the budgets. Let me assume Nigeria, we are receiving revenue far above our expenditure. They can say, come on, let's enjoy it. And that's what happened during this guy's regime. Is it Babangida also? Yes. When we had oil boom, we're making a lot of money from oil. At that time, because there is an economic literature to that effect, at that time, workers negotiated for an increase in wages, and the government granted it. Why? Because the resources was available. This one is my opinion. No? You know, there's this Yoruba that says that you are eating your money. No? You understand? So most of those guys, like they have eaten what we are supposed to be eating now. You understand? So we will just be drinking the water. You know, after eating, you drink water. So they left that drinking water. So, you know, it's just my opinion. I'm just playing. So trade unions is important. Suppliers, yes, those that are supplying you to want to know when they supply you, is it viable? Will you pay? Because a company that is struggling financially, if you go and supply to them, you're on your own. The worst thing that will happen is that there will be litigation. All two of you will go to court. And Nigerian judicial system, 4 years, you are still fighting for 100K. The legal cost will be more than 100K at the end of the day. You just give up and say, well, just be going, don't worry. Do you understand? So I'm just bringing you to the realities of some of these things. And I know you know them, right? So it's not like I'm here to throw. Right. So where are we? Customers. Customers too are also interested. Whether they will seek or they will look for another person they can patronize. Once they see that the way this company is going, I don't think if I want to buy Chivita in the next 1 year, these people will be able to say, let me begin to look for alternative. Maybe I should be drinking Pepsi now. Everything I drink. Do you understand? So customers also need information on your financial statement to make decision whether to continue patronizing you or to shift to the next available competitor. Do you understand? Do we understand? It looks like we are sleeping. You know? That's why I'm trying to see if I can make it as much lively as possible. Then you have public. The public, everybody. Go to any company, public limited company website, you find it there. You need their annual reports. You may say tomorrow, I want to buy MTN shares. I want to buy Dangote cement shares. You can. You can just check. Okay, let me see. One of the things you do, industry or company analysis. Let me see their financial statement over the years. How has it performed? What's the performance like? Let me also go online and see the position of certain analysts. Financial analysts. What are they saying about the potential growth of this company? What is the regulatory body saying? Like the Nigerian Exchange Limited, the Security Exchange Commission concerning this business. Those are the things you now use to say, okay, I think I can now go ahead to buy Dangote cement shares. I can now be a shareholder in Dangote cement. So the public also need, then other interested parties, anybody interested can pick up the annual reports to use. Next slide, please. Source documents. I won't waste time here. What are source documents? Source documents are those documents that evidences that a transaction has taken place. If you tell me you go and buy this one for 50K, what is the evidence? That source document. Example is receipt. Check. What's the first example there? You have gone to buy the fan. I'm not arguing. I can even see the fan. It's even blowing. But what is the? And that's what we are interested in as an accountant or as an auditor. Because there's something we call audit trail. What do I call it? Trail, to trail something. Audit trail is a check of a transaction from the inception to the conclusion. And how do I do that? How do I know that a transaction has started? I will ask for the source documents. You said you pay someone so amount. Show me the receipt. It could be an e-receipt or physical receipt. Abi? Show me. So source documents are those documents that shows that a transaction has taken place. So example, you have receipts. I will not waste my time. You have invoice. You have deposit slip. The deposit slip in bank, when you go and pay, okay, this is deposit slip. You have bank statements. Yes. You have check counterfoil. How many of you have, if you know a check now, there is a section of it, either by this side or down, that has a number. You see that when you are tearing it, you will not tear that part, Abi. That number is what can be used to track that check. Do you understand? So it's also a source document to know that, oh, we issued also amount and say, okay, what is the number? Check counter for it. Payroll reports. Yes. How much have I paid my staff? I'll go and check my payroll report. Purchase orders. Yes. How many purchases have I initiated? Let me check my purchase orders. Debit notes. This debit note and credit note is usually used in situations where, where a customer or a supplier have been overcharged or undercharged. You now want to communicate to them that, come, that goods that I told you it was 10K. It's a mistake, or it's now 15K. You can issue a debit note. Do you understand? So they also evidences transaction. Next slide, please. Yes, accounting concept. I won't waste time here too. What are accounting concepts? Accounting concepts are basic assumptions that underlies the preparation and presentation of financial statements. They are what? Basic assumptions that underlies. You know, everything we do, there are assumptions, right? I'm coming here to take you a session on bookkeeping and accounting for your business because I'm assuming that everybody here either own a business or is looking towards owning a business or working towards owning a business, right? That's an assumption. And that's why I'm here. So everything we do, there's an assumption. So the assumption that underlies the preparation of financial statements is what we call accounting concept. And one of them is legal entity. I've said that in the process of explaining. A business is different from its owners. If somebody sues your business, it's different from you. But in most cases, because SCAMA did not give legal entity status to most of these small business or sole proprietorship business, most times it's to maybe companies. If you are suing Nestle PLC, you are suing Nestle PLC is different from the directors or the shareholders. Yes, it means that every company has a seal, a corporate seal that make them distinct from their owners. Next, historical cost. Historical cost state that when you, for example, when you buy an asset, say for 60,000 naira. Historical cost is saying that that cost of the asset will be carried out throughout the useful life of the asset. Throughout the useful life of the asset, without any changes. So that's what historical cost concept is saying. Then realization. I was talking about cash and accrual basis. Yes, I've explained realization in the process. That realization is when you what? Recognize expenses when they are incurred and not necessarily when they are paid for. And recognize revenue when they are earned and not when you receive them. Do you understand what I'm saying? You understand what I'm saying? So that is realization. I've explained the cash and accrual basis before now. Then going concern. Going concern is saying that a business will continue to exist in a business. Sorry, is there an interruption? It means that a business will continue to exist in perpetuity. Perpetuity means that you are not expecting that the business will fold up in the nearest foreseeable future. That's the assumption. Next, consistency. You all know the meaning. Consistency is saying that when a business is applying a particular accounting policy, they should maintain the accounting policy throughout. It's not really acceptable when a business is using different accounting policy in different accounting years. Be consistent with the policies. Yes. Then the next one here is materiality. Materiality is saying that you will only reckon with any transaction that is capable of distorting the financial statements. I'll give an example. Even in auditing, it happens. When you, for example, when you audit a financial statement, for example, if you discover that there was a director that did, you understand, to the tune of say 200K, and you discover that that 200K, whether you include it or omission or not, that 200K will not affect the view of the financial statements. You may overlook it as an auditor, yes. That's materiality. If it is not material, meaning that if it is not capable of distorting the view of your financial statement, you can ignore. But if you know that it's material, because we hear accounting professional using that word, even sometimes we joke around with it. Like, I'll not take a material decision. When for example, somebody will say, oh, when you marry someone, you are making sure that you have checked the materiality threshold. Yes. What that means is that you are sure that whatever decision you are taking will not distort your life. Do you understand? So, materiality concept explains the fact that any transaction, the inclusion or omission, if it will not distort the view of the financial statement, then we are good. But if it does, it shows that you disclose it. You say you discovered that a director, played with maybe about 500K. That's why in an audit opinion, there are sections. After seeing whether it shows a true and fair even have different stages. Uncertainty, material but not uncertain. They have levels. If it's not material, okay, it's still good. That is why the fact that a business report is audited does not mean you can still not go and make decisions based on the audited report and still not maybe lose money as an investor. Although it is part of the code and ethics in accounting, we call it duty of due care. If you don't exercise due care or competence in carrying out your work, and it now results in a third party suffering a loss as a result of your negligence, then such accounting person can be brought to make good the loss that person has suffered. I mean, you'll be charged, yes, and you start from there. Because you cannot say anywhere in the world, you cannot say someone is guilty unless a court of competent jurisdiction have said that person is guilty. It will remain an allegation. Do you understand? So, next, So we have substance. Yes, substance over form is that when you are recording financial reports, you look at the substance should outweigh the form, the legal form. Substance over form is still an extension of like materiality. Let's look at how this will affect our financial statement rather than the legal form or the form is taken. That does not mean the legal form is not important, but the substance also matters. Next, money measurement. Yes, money measurement is just talking about how you have decided the monetary units you have decided to measure your transaction. Is it in naira? Is it in dollar? Is it in? If you go by extension to explain that accounting, international accounting standard 21 talks about foreign currency, and there's something known as functional currency and presentation currency. So that's another thing on its own. So money measurement generally is talking about what currency have you chosen that your financial reports should be reported in. Is it in naira, in Ghana cedis, in US dollars? The next one is accounting cycle. This is very simple. From source documents, you now go to journal. You record in journal that shows debit and credits. I brought some of the works I have done, like for some, but unfortunately, I don't know, my files, my flash, it's like it got corrupted when I was trying to use it. I may not be able to show that. You would have probably see all these things. So from source documents to journals, from journals to ledgers, right? And from ledger to where? And from travelers to your financial statement. The question is, what does your financial statement look like? Next slide. General purpose financial reports. What is expected of the financial report of a company? According to IAS 1, you have income statement. Income statement is the profit or loss. Let's know what is the profit or loss of your business. That's what income statement shows. Statement of financial position, balance sheets. Let's know the state of affairs of your business in terms of your assets, your liabilities, and your equity. The next one is statement of cash flow. I've said that. Cash and cash equivalents, liquidity of the business. Now, there's something you will note. When I was talking about income statement, I used profitability, Abi. You want to know the profitability. But when we go to cash flow, I'm saying what? Liquidity, Abi. Just note that somewhere because I will ask you something that pertains to that. The next one is what? Statement of shareholders' equity. Yes, how has equity changed? How has it changed? Someone who owed 10,000 units of shares. Is the company issuing more shares? Let's see. That means if you are issuing more shares, you are getting more funds from investor. So your statement of changes in equity over the years is expected to be prepared. And the last but not the least is the note to the FS. FS means financial statement. Note to the financial statement audit. What are the notes? Is there any legal threats? It's expected that you disclose in your, when you download the annual report, you see it. But the way I'm seeing it, there is a current litigation in the courts at the moment that somebody is saying that while they were drinking our drink, they found cockroach in our drink. And the person sued us. It's a litigation. And by your assessment, you may feel like the litigation can be a threat to your going concern. To the fact that the company will continue to exist. And there are evidence that there is cockroach. Although, of course, in Nigeria, we'll find lawyers that will find a way to make that cockroach looks like. You understand? So, note to the financial statement. There should be notes or disclosures to the financial statement. Next. Yes, class discussion 1. Why is this out? Well, maybe. Class discussion 1. What is the difference between profitability and liquidity? Online participants, on-site participants. What's the difference between profitability and liquidity? I hope somebody will not go and check online and be telling, yes.
Hello, sir.
Okay, go ahead.
Hello, sir. Can you hear me?
I can hear you. Please go ahead.
Okay, talking about profitability, like in simple terms, that's revealing the profit of the entity. While liquidity is talking about the cash, the available cash to run the day-to-day activities of the business.
All right. Thank you very much. That is apt. Thank you very much. Any other person? Liquidity, profitability. Liquidity, profitability. You wanted to say something before? No. Don't be intimidated. Say what you want to say.
Hello. Hello. Hello.
Hold on. Profitability
Hello. Okay.
is the money you make on top of your capital after running a business. I don't know if I'm this liquidity. The liquidity is hold on, let me try. Is running out of I don't know, of your cash. Yeah.
Okay. For profitability, I believe that is what you make of that's interest. I won't put it, I would say a profit that you make on your capital, the money invested. That's profitability. But the liquidity, I would say, is like a cash flow. That's where I'll put it, a cash flow.
Thank you
Hello.
very much. So the online participants,
Hello.
please go ahead.
Yeah. When we talk about profitability, to my knowledge, I believe that how well the business is doing, like the returns on what you've invested, like what the company has on the sales, like how much have they made, the selling price minus the cost price, the profit and other expenses. But liquidity, I think that how fast can you convert the stocks to cash, kind of.
All
I think
right.
that's
Okay, thank you very much. That's also apt. Yes, basically, what you need to know about the difference between profitability and liquidity, we said it. But what I want you to know, I will start what I want to say this way. A company can be profitable and might not be liquid. Let me just, everything you have said, that's what it means to. But I want to say this so that it will better put things into perspective for everyone. A company can be what? Profitable and not what? Liquid. Liquid is talking about what is the easiness of the organization to get cash, to meet its maybe daily needs or short-term needs or requirements. Profitability is talking about the financial performance of the organization on the overall scale or level. Now, why am I saying a company can be profitable and not liquid? Is that, don't forget, when we calculate our profitability with income statements, I told you in fact, in the commercial sector, we use what we call accrual basis. You are recognizing a revenue that you have not received, but because you have earned it, isn't it? Have you received it? You have earned it, but you have recognized it as part of your sale. So it's going to improve your profit. But are you having a cash or a cash equivalent to that effect? No. Do you understand? That's why one of the things we look at as finance in the finance space is that we know personally that the fact that a company is telling you on their financial statement that they make profit of 10 billion naira, we know that they may not be doing maybe as well as that profitability has shown. And the reason is because when you're talking about profitability, you include both money received and money earned. The one you have not received. For example, now, if you come here and somebody says, if you attend this place, you'll be given a sitting allowance of 50,000. You have not been given. It is after the session or maybe whenever. But you can record it to say amount receivable, Abi, and it might be part of your revenue, depending on the what do you call it now? Depending on the sector you are operating. But have you received the money in actual sense? That is why you see that a lot of companies are profitable on the face of their financial statement, but they are still struggling financially. Yes. You can be profitable as a company on your financial statements, and the company will still be struggling when it comes to meeting its short-term needs. Because you might, like I was talking about leverage the other time, you might have these fixed interest holders demanding for their interest. But your business is showing you have made a profit of 100 billion, but in actual sense, you don't even have cash 10 million. So that's one. What shows profitability, how profitable a business is on the what? Income statement or statement of profit or loss. And what shows the liquidity of a business is on their what? Cash flow statements. Do we get the difference now? Do we get the difference? Yes. Yes, it's still possible. I know you are taking it the other way around. You know, I said yes. Profitable and not liquid. Yes, it's possible. It's also possible. It depends on your cash management system. Yes, because a company can be liquid and not profitable. It's possible. But out of a scale of 1 to 10, the likelihood is like 2. Yes, because for you to have received money, it means that in the first place, for example, sales, you have made a sale. But you can make a sale and not receive money, and you still count it as part of your sale. Do you understand? Next slide, please. Okay. Yes. Okay, your bid. Now, when you say liquidation, it depends on how that mill is being constructed. But generally, when you say liquidation, you are talking about, sometimes people believe that when a business ceases to operate, you have to sell the assets. And when you sell the asset, what do? You are converting those assets to cash. So sometimes it's also, in fact, the layman or most simplest definition of liquidity is the ease to convert an asset to what? To cash. So when they say your investment has been liquidated, in that scenario, what they are saying is that your money has grown wings. Do you understand? So it's still talking about money, liquidity. Do you understand what I'm saying? So if your investment has been liquidated, 2 things. It could mean that for that day, your trade for that day, you've closed for that day, and the amount left, either the amount has gone or there's an amount left that has been liquidated to one account. Maybe you have an account you used to trade. So, for example, when you trade, you lose, say, you have 10,000 naira, you lose, say, 8,000 naira. They could tell you that account has been liquidated. Or you have 10,000 naira, you trade, and the whole of the 10,000 naira is gone. You can be told that the account has been liquidated, meaning that that account is no longer liquid. You don't have any cash. Do you understand? That's what they are telling you. You don't have any cash available to take the next available trade. When you are saying you don't have cash, you might be saying illiquid or not liquid. Do you understand? Do you understand? Do you understand? So what you just need to know, because when you use liquidated in that, sometimes one funniest thing about even grammar generally is that you can have the same word, different usage and meaning depending on the context. Do you get what I'm saying? But generally, when you hear the word liquid, you're talking about cash, money. So if you enter the room now as a man and your wife, you want to speak accounting term, let me assume you marry an accountant too. And where is it when you say, Madam, I'm not liquid? What you are telling her is that, Madam, I don't have cash. Do you understand? Or I don't have anything at this present moment, quickly, that I can convert to cash. Do you understand? They used to say something, and I think I believe. They said the accounting profession is the only profession you practice in earth and in heaven. Is it true? It's true. Because you account for everything you have done on earth to God. So I think, so that's why anytime I know I studied accounting, you understand? So I'm always like, that's good, I'm learning how to account, both on earth, for business, and also in heaven. But it might be funny that God will just be looking at you when you say my equity is this. You just say, throw him inside fire. This one does not know what he's saying. All right. So the next one is basic regulation. Thank you for this. What are the basic regulations you need to have an idea of? You have a IFRS. IFRS is International Financial Reporting Standard. It governs the preparation of financial statement. The next is Personal Income Tax Act, 2011 as amended. That has to do with filing of tax returns. The next one is Company Income Tax Act, CITA. I've explained all these things over and over again. The next is, why is this thing under it? Is it because the next one is Finance Act? I put 2022, 2023 here because that's the recent. I've told you the trajectory. 2019, 2020, 2021. Then the next one is CAMA. So as a business, these are some of the laws you want to watch out for because, of course, there are still some of them too, but these are the major ones because they apply to your business in Nigeria, right? So it's important. Next slide, please. What are now the general tips that you need to make your business stay afloat of collapse? Yes, because sometimes it's not sufficient that you have the best of the best investor. There are some other things you need to look out for to make sure that your business stay afloat of collapse, especially when you're even operating in an ecosystem that appears to be after the life of our businesses, where everywhere you turn to, you pay tax. There's a word of one of these tax professors that I know. He said, tax is the only thing that when you buy, you pay tax. When you are giving birth to, you pay tax. I hope you know, birth certificate. When you die, you also pay tax. It's only tax that you will pay throughout your life. Even after life, you still pay tax. So it's important to know these general tips. So number one, understand the peculiarities of your customer. Yes, this is like a direct advice or tip to you now. Understand the peculiarities of your customers. It is only an insensitive entrepreneur that we start producing without thinking about the customers or the needs of the customers. You know, in business management, we used to say that any business is aimed at creating value, right? And you know, it's a circle. For you to get value in return, you have to have created value, right? And trying to create value, you need to understand the peculiarities of your customer needs. You are in a market where they need cold water. You are boiling water. Everything is still water, but something has disqualified it. One is cold, one is... So you have to understand the peculiarities of your customers. What do they need? This one is general now. It might relate to accounting, it might not. You understand? So you understand the peculiarity, the needs of your customer. I used to say something personally that when a business collapses, go and check. It's either the business in the first place did not exist to serve a particular customer, or along the line, they lost it. Check businesses that have collapsed. Check the likes of Nokia at a particular point. When people were transitioning to touchscreen and all, they were still producing keypad. And Android took over. I remember my first phone. It was a Nokia phone. You understand? At the point that we will be playing Snake. You understand? Soccer league. But what happens? That shows that even as a business, if you don't revolve with what's the needs of your customer, you may see that you may have the best of the best idea. But if you don't tailor your idea to the need of your customers, you may discover that sooner or later, you may just be losing it. So it's important to understand the peculiarities of your customer, right? There's this saying, when they say customer is always right. You understand? It might be true, yes. I've worked in StarTimes Nigeria before as a customer care representative. You know, when you call, those people you call, hello, my StarTime is doing this, and that. Do you understand? Yes, that's where I worked. I have picked a customer call before that was cursing me. One was even giving incantation. But as a customer care agent, all those things, you keep saying, we apologize for the inconveniences, sir or man. Somebody that you know that if you had met face to face, you will get to Area F police station, the way you fight. Do you understand? So what I'm trying to say is that because you need to understand that your customer should be at the fore of what you do, regardless. Customers can be irate. You're supplying something, he comes to say, oh, even what you have done right. You're supposed to maybe transfer money into an account. You tell you, no, you don't do that. You're supposed to come. Some of them will even tell you, you're supposed to even help me press your account number on my phone. Do you understand? So you have to understand the peculiarities of your customer. Separate business resources from personal resources. I've said this earlier on. Your business should be what? Separate from your personal resources. Ensure all funds are accounted for, particularly cash, which can be moved easily. I've told you before. All resources are what? Accounted for, especially cash. Don't overlook it. It's important. And that 100 naira you overlook today, if you keep overlooking, can account or can amount to a 200K tomorrow or 100K tomorrow, and will start affecting your business. So you account for all funds. Yes, because you can even need them to secure what? Grants. The next is make provision for tax and deadline, and put the deadline in mind. For companies, I put it there, 6 months. Tax also can now be paid online. Yes, you can pay tax now online through your bank app. So put your tax deadline in mind as a business. I know a lot of people want to see how they can avoid paying tax. Yes, but you are still obligated to pay tax and have your deadline in mind. Pay tax at your due time. Get your tax clearance certificate. In fact, I think there are some even international opportunities that if you want to get, they request your tax clearance certificate. Somebody who have not paid tax, of course. So it's important. Then the next, yes. Yes, there is. If you are paying after 6 months without no reason, there's a list of those penalties, but I can't remember particularly. But I know that if you fail to pay tax, for example, you will now be charged. You still pay that tax, but you now pay an interest on the amount of tax you are supposed to have paid, equivalent to the MPR rate. MPR is monetary policy rates. And depending on how severe it is, you may even get a jail term. Yes. Depending on the severity of why you have not paid. So if you check the FRS Gazette, you find it there. The penalties, there are so many for me to put on my head. So next, keep track of your expenses. I've said that over and over again. Maintain daily record, sales day book. Don't say, don't worry, once month end, I will accumulate everything. No. Maintain daily records. Have an easy payment method. Yes, I've said it earlier on. When you put your customer at the fore or center of what you do, then you have an easy payment what? Method. Right? Have an easy payment method that you know that they can easily pay their money to. The next one is prioritize an audit trail. I've said it before. Audit trail is what? Who can tell me?
Hello. Hello.
All right. Sorry, please hold on. I'm with you. So audit trail is like saying that you are tracing a transaction from the inception, beginning to the conclusion, to check if that transaction went through the normal internal control system. Do you understand? So sometimes if you don't keep proper, that's why this is a general tip, is that if you fail to do all these things, when finance experts come on board to check the operations of your business, they may discover all these things. And it may be at the point where maybe you're in desperate need, perhaps a grant or something. Yes, sorry. The person online, please go ahead. Do you have a question or what, or a contribution? Hello, can you hear me? All right. Maybe you are far from your phone. Now let's continue. Keep track of your account receivable. I've said that already. Account receivable, that is your those owing your customers that are owing you. Yes, even in auditing, we also prioritize what we call debtor secularization. What do I call it? Yes, we want to confirm your debtors. Are they truly owing you? And what is your payment period like? Is it that when they buy goods, you give them a stated period to pay? Because all these things also affect liquidity. There are some businesses, they don't even have a payment cycle. Once you buy goods, the customer may not pay in the next 6 months. Those are part of the things that will affect your liquidity, right? The cash you will have at your disposal. So you want to keep us, and you also prioritize using software, no matter how little. Everything has gone to this point now where people are now using software. If you have any software you can use, please go to the next slide, like Sage, like QuickBooks. Oh, I'm talking about grants. Go to the next slide. I'll come back here. Like Excel, like QuickBooks, like Sage, like Expensify to track your expenses, like Zero accounting. Most of them are just online, and most of them are paid. That's why I said the one I will talk about briefly in this class as I end this class is Microsoft Excel. It's free. You can even get it on your phone. Most of these ones, because they deal with, you store your records on the cloud. Of course, you have to pay an amount to maintain those things. The database, right? So you want to use any of this. Then go back to the previous slide. This previous slide are just grants you can watch out for. Yes, you can just maybe write them down, or take a picture of, or just have them. Grants you can for your business. Bank of Industry, they have BOI, they have a grant, and they have their requirements. Go to their website, you find it there. You have Tony Elumelu Foundation. Yes. There was a time maybe last year, I know someone who applied for it. If you have a good business idea, there is also Lagos State also have an entrepreneur trust fund. Yes. Growth Fin Fund. That one is for businesses in fintech. Maybe you are looking at having a fintech related business. You can take your pitch to them. Then the last but not the least, there are many of them. You can look out for them. You can watch out for them. Is Africa's Young Entrepreneur Empowerment Nigeria. You can also look into that. In fact, ARM also have one. Yes, I'm aware of that because I've also intended. They call it DAYATA. DAA. That particular scheme is named after their founder, Dejali something, whatever. DAYATA. You can Google it. Yes. They also give grants to entrepreneurs. You come pitch whatever. The last one, they just concluded the last one. There's another one they call ARM Innovation too. I think last month, and the winner went home with maybe 20 million or so. So those are some of the things that if you receive for your business, you can use to help your business. So quickly, let me see if I can touch the rudiment of Excel as I end this class. So thank you very much. I wish I have like an account already. So I'll just be telling you to do this. But now just think about maybe some transaction, maybe 2 or 3. I'll just show you. Then on your own too, you can also take time to also maybe see some small videos online. But on how you can be good on Excel. But the basic thing you need is how you can use it to record your transaction, maybe your income statement, your cash flow. This is what I've received. Of course, and cash flow is divided into operating cash flow, investing cash flow, and financing cash. But those ones may not be applicable to you as a small business, right? Just track your cash summary. This is what I received, this is what I've paid. Your profit or loss. Oh, this is my profit, this is this, and this is that. So when that comes on board, you can just conclude this class with that. And I'll be sure that with these few points of mine, I've been able to convince you or to make you learn about accounting for small businesses, including the legal regulations. And from there, I know that you have a successful business by God's grace. Yes. So, can we have that? Or quickly, do we have maybe a question or contribution online, on site? So I just take you through briefly on how to just record transaction on Excel with few transactions.
All right, sir. Good afternoon, sir.
You have a question?
Not a question.
A
Just
contribution?
A request.
A request. I hope it's not
Yes,
my
sir.
slide.
A slide, and then how you can able to make this thing all the clear if it's not that bold. Yes, sir. Yes, including the font size so that we can see, sir.
I should increase the font size.
Yes, this video now.
Oh,
Yes,
sorry
sir.
about
It's
that.
not.
Can you see our screen now? Excel.
Yeah, I'm trying to see it. It's very tiny.
Are you using maybe you are using your phone or something?
Yes,
Because-
yes, you are right.
Oh, maybe
You are
that's
right.
why. Sorry about that. Don't worry. We'll see
No
how
problem.
much we
I'm
can
fine.
zoom it. This okay, so
Yes,
that we
I'm
can
fine.
just do
Yes,
one or
it's,
two
it's okay
things.
now. It will be fine now.
All right. Thank you very much. So let's take just
I
three
left.
transactions, like 3 transactions, and we are off. Hmm? Yes, and we are off. What do you say? I can. So imagine that you own a business. Say, what's the name of that business? What's your name? Or your business name? What do you call it? I'm not an English student. Oh, yeah, spell it. R-O-N. Okay, Ronix what? Craft. Wow, nice name. You make craft, right? So Ronic Crafts, you want to record, say, what you have in the sales summary, for example, say sales. Sorry, I might type a bit slow. I'm also using one mind to hold the mic. So say maybe sales summary, for example. So I can come here. I can have my quantity. No, let me start with dates, right? What next? Quantity sold. Abi, are you with me? Price. Are you with me? Price, maybe in dollars, and you have discount, if any. And you have your amounts, Abi. And you can even have, before this, you can even have the name of your customer, whoever is buying from you, right? So I can come here, say, on the 3rd of July 23, I'll just take like few. On the 5th of July 23, then on the 10th of July 23, what happened? The quantity sold here is 1,002 units. The one sold here is 600 units. The one sold here is 800 units. What is the price? The price is $5, $10, $15. And you want to account for the amount. Let me assume the discount here is maybe 0. Sorry. Let me assume there is no discount here, Abi. Let's say 0, right? And you want to account for this, the amount. What will you do? So you can just use your Excel formula, right? To multiply. Or you can just say equals to. Once you press equals to, it shows that you want to perform some arithmetic operations. Equals to, if I was adding, for example, if I had said sum, it will bring up the option. Then you press your tab to pick which one you want to use. But in this case, I want to multiply to know the amount. The quantity is 1,002. The price is 5. So how much did I receive in total? So I can just say equals to, I'll come and pick this, right? Then times this. Are you there? So when you press enter, you have the figure already. Then it depends on, that's why I wish I have the files I came with, because that is like a file of a business. You have a lot of information. So let me assume you have a lot of information. You don't need to stress yourself. All you just need to do for it to keep the same operation, just come to that edge where you have the arrow changing to plus and drag down. Then you have the figure. So imagine it's 1,001 transaction. Once you drag down, and if it were to the side, you can also drag to the side. But of course, there is nothing there. I might not have anything there. Zero. Did you see that? It will keep applying that same formula. If you want to confirm now, let's come here. Did you see the formula up in the formula bar B4 times C4? Abi? Let's check the next one. What do we have? Do you understand? So it will keep following. Since it's not an absolute referencing, it will follow that. But let me assume in a situation where at this point we have discount of say 5%. That means that this person will not be paying 6,000. Do you agree? Let me assume this one too is also 5%. This man will not be paying 6,000, right? So what this man will be paying, then I would now change this formula, right? Are you with me? So this can be this. There are different ways of doing it. This can be this, right? Then times, what is the percent? 5%, Abi. So how many percent are you receiving? 95%, Abi. And 95% is what? 0.95. I have 5.7. That means this person will not pay 6,000. 5% discount has been granted, and the discount is 300 naira or $300. That means you get 5.7. Since this is also the same way, I can bring this down. You can see that it has changed. And I have 11.4. So it now depends on whatever account you are preparing. This is like a sales summary to keep track of your. If it was expenditure or expenses, you have it listed. Then you apply. It's very, very simple. When you are adding, you use your sum. When you are subtracting, do you understand? So then, what other thing? If it were your income statement too, your financial, I wish I had those files. You see what a senior financial position looks like. It's just like entering your normal, what do you call it? Your alphabet, then your numbers, and you perform your operation. So it's not like an in-depth thing. It's only when you are doing something like maybe data analysis. That's when you need some advanced like pivot table and all of that. But that's not why we are here. You don't need that. All you need to do is to see how you can use this to what? To keep your records, as the case may be. So I think I will end the class here. So you can download annual report, like I said, to see how it looks like. Then also make further research. And my sincere wish for you is that your business will grow. Thank you very much. And let me display the last slide. Any question? Any question online, on sites? Just
No question, sir. It's very clear, sir. Thank you very much.
Very clear. Okay.
Very, very
no
clear.
question, right?
Sorry, I have a question, sir.
Please go ahead.
Please, I had this question earlier, but you did not attend to it, like via the chat box.
Okay, sorry, I didn't see it. I didn't see it.
Okay, I asked if education tax is different from tertiary education tax.
Oh, I answered. Probably you didn't hear me.
Okay.
I said it's the same thing.
Okay.
Tertiary education tax is that because all the funds collected as tertiary education tax or education tax, in most cases, they are used for our tertiary institutions. That's why you see, you really may not find third fund on primary school building. What you find there is superb, because every state government has a board that deals with education. So it's tertiary education tax as education tax, and it's now 3%, Finance Act 2023. I hope that answers your question.
Yes, thank you.
All right, so thank you very much. My slide. Don't worry, I'll get it across to, because sometimes too, you know, it's an intellectual property. And sometimes too, since a situation where we share slide with people, and in fact, I had seen that the person took my slide, edit one or two things, and go and use that slide to present well. So that's why ever since then, I have vowed that anything you want to get, that's why it is a presentation. Abi? That's why it is a presentation now. From what I've been saying, you have jot, and I saw some of you jotting now. So you'd have written a lot. Even if you did not jot, you would have stored a lot here. You understand? That's why I've been very careful. And that's why I also said what I said the last time. But this is what I will do. I will not share the PPTX. I will share the PDF. Even if you want to go and copy it somewhere. I know that. So you can take this off and share the PDF with them. And you can also connect with me on LinkedIn. My name is Elijah Afolabi. Thank you very much.
Thank you so much for the job well done. We really appreciate it, sir.
Hello, admin. Hello.
Hello, what's the
I-
problem?
Sorry. While I was trying to click on the attendance link, that was like 20 minutes ago when she sent this. I was logged out. I don't know, my network prevented me from submitting. So and I can't find the link anymore. I don't know if there's a way you can help me send it again. Thank you very much.
No problem.
Thank you.
There's somebody for that.
Thank you, admin, for the opportunity to stream online. Thank you so much.